Now can you guys hear me? Can you hear me now? Please, hopefully. You guys hear me now? Anything? Hello? Yes, can hear you. Good morning, Dave. Good morning. Can you see me also? Can you see my screen also? Hopefully see the indicators. There might be some echo. Sorry, guys. Might be some echo. Good morning. Can see and hear you. And you see the indicators, right, Justin? Good morning. Going to get started. That is actually 8 o'clock. So, well, thank you for joining the webinar. So when I started doing this was asked to do this, I kind of contemplated a couple different things. And I really want to start showing, I only see CCM. So you see this over here. Okay. So you're seeing, hopefully there's audio. People say they can hear me, but you can only see, horrible. I'm going to spend half the time trying to figure out how to get this. Well, I'm trying to figure this out. This is ridiculous. Well, I do the share screen over here. They say they can hear me, but they can only see this screen, even though it says it's sharing that screen.
It might be the way that you have this set up. You need to put this over there, potentially. Maybe? I'm not sure.
But this is what it shows.
And then have it select.
See. Okay. All right, so that should be hopefully what they're seeing.
Yeah, that should be what they're seeing. So, okay, well, you can start. So go ahead and start. Brad, go ahead and start.
I've already started. Now can you see my capital city? Or not my capital city, but see the indicators? And can you still hear me? Can see and hear you well. David, do you see our indicators over here? Hopefully. I see indicators. Awesome. All right. How's it going?
Good. How are you?
Good. Yes, thanks. Cool. Thanks, David. All right, so we are going to get started here.
So you got people live, right?
Yeah, we got people on here. All right. Good morning. Good morning. So we have started. I actually already took some trades. When I was asked to do this, I kind of wanted to set it up so I was how I would trade in a 3-hour session in the morning if I was going to be scalping. So that's kind of what I I want to set up. All right, glad you got it figured out, Dan. And so usually when I start trading in the morning, I get up at 6:30 and start getting ready. So I logged on here about 7:30 and started looking to see if I could see some trade setups or setting up. And already took some sells, nothing in the account that I'm going to be handing in, but took sells in my live account and in my demo account and another demo account which is filled. And then, I usually, when I start trading live, 7 o'clock is usually when I look for my trade setup. So I kind of wanted to implement what I was doing. And they have us set up multiple demo accounts, which is fine because there's some new things I'm trying out. So I have multiple demo accounts and we're going to be playing in those. And then I'm going to be setting up another demo account that I'd be treating like my live account. And so I'm going to kind of show you how I'd not manipulate, but how I'd play the market if I was actually trading live. And I think that's going to probably help the best for students. And so I was saying that this would be my live account. And in my live account, there's a certain setups that I'm looking for. And the scalping thing that I've been playing around with, I trade a little bit more longer term, but this actually set up this morning. And it set up about 15 minutes before I got in here. So this would be my live account. And in my live account, I'm only looking for the best trade. And I'm going to put this in, and that's it. And it might be the only trade I take on my live account. Right now, we're up 4 or 5 pips. I'm going for about a 1-to-1 here based on what I set up. Looks like the market's kind of sitting in a little trending. And so we're going to let this one run. But today is also a scalping competition, right? And so just if I was trying something out new, right? Or if I was going to be playing, or maybe especially in this, there's going to be 3 coaches in here giving 3 different opinions on how to trade. This is what demo accounts are set up for. This is what we want to play around with, is those demo accounts. And so I got my live trade in, and I'm going to wait and watch this. Now it's time to play. So I've been playing around with a few things here on a scalping setup using majors and minors. And this is a 5-minute chart, and this is pressure. And call it clean pressure. I'm just putting pressure underneath the candles or over the candles. And this is what I've been playing around with my entry. A lot of coaches, and even I did for a while, we would use pressure maybe on our larger charts to kind of show a direction, and then maybe come down to our majors and minors and look for entries on a smaller chart, which is great. Great strategy. It definitely works. But I wanted to try and start something new. I was introduced to this clean pressure by my coach about 7 months ago, and I've been playing around with it to see how it works. And so when I started doing, or was asked to do this scalping competition, I knew it was going to be on Friday. If you guys don't understand that Fridays are going to be different than Mondays and Tuesdays and Wednesdays and Thursdays, right? The market's going to react differently every single day. And so, like I said, I'm probably more of a midterm trader. My favorite chart is the 240, 120, and the 60. When they said scalping, I believe that how I trade should be able to go down into a scalping scenario as long as I'm trading in a market that has volatility or has movement, or a lot of people are watching it. And so I first wanted to write up a plan, right? And with that plan, I started back testing in the first of the year. And on Fridays, right? Because this is when the scalping competition is going to happen, on Friday. So I came back in and I started marking lines, and I go back to see if this plan is going to work out. My plan is to have my majors and minors on my 30 and my 15. That's going to be a signal for me, right? And I'm looking for these to be overbought if I want to look for a sell, or oversold if I want to look for a buy. And so with that, then I'm going to drop down and start looking at my 5-minute clean pressure. And once I get into this 5-minute, and this are a couple different ways I'm going to do this on our demo accounts. One I'm going to try and let run, and the other one I'm going to try and target. So those are two ways that we can potentially get profit out of the market. And so in my live trading, I like to use support and resistance to kind of tell me where I'm going to put my protection. And then based off of that, I usually go about half. And so this is a trade back, and this is what I've been back testing to see if this plan would work for today. And so we're about 7 pips. So this would be about a 3 to 5 pip scalp for me. And we can see if I went for 3, I would have gotten it. And if not, we would have hit our stop loss. And so these were the things that I started going back and looking for and getting the data of this, right? This is how we become successful, is back testing. A lot of students don't like it, but this is our education, right? This is how we determine if we're going to, I always say it's like a lawyer studying for the bar exam, right? Back testing is our education. So here's a pretty good, nice setup. One thing that you'll know, maybe if you've been playing around with the majors and minors a lot, is we can see the pressure on these bigger candles going down, right? So you see this overall pressure. So majors and minors do two things. They either will start a reversal or they'll start a little pullback and then a continuation. And so when I've been back testing this is the stuff I've been looking at to put live today. And so just want to kind of show you a little bit of examples here. This was 15, so I'd be going for 7. I think it only went up 4. And then when it broke down and continued with the trend, it ran away. So I'm going to look if I can get some scalps and hopefully be maybe a start, because some of these, they do just run. You ended up getting like 50, 60 pips. Other times, they say, nope, we're just a little pullback, and they start running away from the market. Oh, come on. Flipping out. And so, again, only did about a year of back testing. And so I've been playing around with those two scenarios. And that's kind of what we're going to go with today. All right. Sorry, gotta love technology. And that's what I'm going to use my demo accounts. So I put this trade in my live. I like the setup. If it wins, great. If it loses, it doesn't. I've calculated percentages out. And I just play it almost like a casino mentality, right? If I win, I win. If I win at 80% with a 1-to-1, I'm doing very well. I only have to be around 55% wins at a 1-to-1 ratio, right? And so that's my live account. I'm probably going to be good if that was my live account for today. We'll see if we see other setups, but if not, that's going to be it. But now let's use demo and what demo should be made for. Demos are made for trying new things out, right? And so now with these demo accounts, let's look through here and see live if we can find some setups to start taking and practice. Like I said, I usually target trades. And so if that was my trade setup right there, there was 10 pips and yeah, barely missed it. That trade was CCM. And so CCM has a little bit higher spreads than we do on turnkey. But let's look through. Here's my master chart. So this master chart is just my 5-minute clean pressures. So on my 5-minute clean pressure, I'm looking for two things. I'm looking for a little bit of a trend to see if I can see something maybe breaking out. And maybe yen. Yen might look like it's going to be breaking out and running. And so this could be a great thing. Pressure's down. Looks like it broke through this little support resistance line. So now we can go over to our demo account. And demo account, and we can, I'm using a $10,000 account here. That's what they want to set up. And so we'll kind of get into this later in the day. $10,000, I'm always going to want to risk about 1% of my account balance. So based on where I'm going to be putting my stop, so we're going to be getting in here let's say my stop's going to be 12 pips. So if I divide this by 12, that's going to say how many dollars I can trade per pip. So I'm going to do about 1. We're going to put a sell in. Okay. And put a sell in on USD yen. I think it's kind of breaking down below a support line, and we'll see if we can get this to run. Now, I have 2 different demo accounts, and so I'm going to be putting them in both today. One, I'm going to see if we can let some trades run. The other one, we're going to sit here and target and see which one works out better for us. And so the one I'm going to let run might have a little bit bigger of a stop loss to see if we can get that potential. The other one, I'm going to start scalping. Sorry, these are new demo accounts. We're going to start scalping and just targeting with a take profit. Probably scalping maybe 3 to 5 pips. We'll go 5 here on the yen on the other demo. And have a stop loss there. The other one, if I'm going to let it run, maybe a little bit bigger. I'd probably say maybe a little bit bigger of a rope. But I always want to protect every single trade. Right? Every single trade and protecting every single trade is very important to me. Right? I've had students that haven't protected trades and they've blown an account in 12 hours, right? And that, for me as a coach, I want everybody in here to make money, and I know that everybody's in here trying to make money. Understandable. That's why I'm doing it, is to make money. But we also have to make sure we're being smart about it, right? And so, number one key foundation for me on money management about trading is money management. And so no matter what, I'm never going to risk more than 5% of my account balance, ever, on a trade session or even on a trade if a trade starts running against me. I'm never, ever going to risk more than 5%. That's going to allow me to come in and trade the next day, right? If I lose 5%, I lose 5%. And I go on with my trading, wipe off, see if I can learn from my losses, and then I continue for the next day. I've never yet seen a 100% trade plan. Never, right? And so our one trade just hit 3 pips on our one that we were just targeting. So we're out for 1 on the US yen already. Our other one that we're letting run, that one's up 3 pips. A lot of times, one of the coaches here, Matt Watts, if you can get really good about being a risk protector, right? And so you can come down here and break even as soon as possible on your trade. So we closed out of the one with 3 pips. And on this one, my risk was initially up here, right? And so now I'm going to come down here and I'm going to try and protect this trade. Hopefully we can get some that run today, right? Maybe that will allow us to win the competition, right? But the cool thing is, right, now the worst thing I can do, this is a positive stop loss, the worst thing that I can do is 1 pip, right? With commission, I'm going to lose just a little bit. That's $9.67. Commission here is $2, so I'll win just a little bit, not a lot, right? But we want to see if we can get maybe some home runs on our one demo account. And I've been trying to do this in my own personal trading, right? And this is what I'm practicing right now, is I want to see if I'm really good at targeting, right? We just got in and out of a trade 3 pips on the other demo account. I targeted. I said, this is how much I'm going to risk. I'm going to take a ratio based off that and I'm going to target it. And it's out, right? But if we can become really good at possibly eliminating risk and maybe letting these trades run, that's just a benefit to us. And there's multiple ways to do this, right? We can come over here, trailing stop. I can put this trailing stop on. This is 15 points, which is 1.5 pips, right? And you can see it's going to move down here and lock this in. And as this keeps moving down, 1.5 pips away from this stop loss, it will continuously move it down. The one issue here is 1.5 pips on the US yen on a very high volatile moving pair, is this is probably going to come back up and hit me out here in about a second. And that's the thing with trailing stops you kind of have to figure out and move around with, right? But still, it's a scalp. We just scalped this. We just locked in 2.9 pips, and we made some money. And so it'd be nice if this just took off and ran. It looks like it's going to pull us out. And so that's one way, trailing stop. It's a program that MetaTrader 4 runs. The other way that I was doing that would be manual, right? And I'd lock in a pip. I try and get positive as soon as possible, and then see if we can let this run.
Did you set up the trail stop? When did you set it up?
So a trail stop can be set up at any time, right? So it can be set up when you put your trade in. So right when we place a trade, we can put a trailing stop.
But you just did it just now.
But you can also, if the price moves down. So a lot of my trades I don't put take profits on, right? I'm always about risk managing. So my big thing is I'm going to manage my risk.
So what was the first stop loss you had on?
So that first stop loss, let's see if we can get another trade in. This is the great thing about today is we're going to have opportunities. So let's go through and see if we might be able to see something else setting up. I still got a few minutes right here. We were looking back here. This could have been a good time to get in off of pressure. Kind of looking like we have an uptrend. So we're going to now put this. We'll do a euro yen or a euro USD trade on one of these, and so we're going to kind of set this up. So, I don't even care what account. All right, so we'll put a buy in. All right, so we're going to place a buy. Woo! I am over leveraged to the max. This is good. Good learning here. All right, this is very high leverage, so I'm definitely going to want to put this stop loss. So we had a question here about trailing stops, and I think a lot of people want to know about trailing stops, which is great.
Just stop loss.
Stop loss.
Any kind of
anything.
Stop loss. That's where I'm failing everything.
Okay.
So now you're putting that down there as a stop loss, right?
So this is a hard stop loss, right?
Yeah.
So we want to make sure we protect every single trade. That's my number one foundation of trading. Even one of the founders, Kevin, he says that's probably the best advice I can give to any new trader. To protect every single trade, right? Because we're going to lose, especially at first. I always tell like the first 90 days of this is a training wheel phase, right? And the scary thing is you're going to learn more after you get done with coaching and you start applying this in real live market scenarios than you did with me. It's just human nature. That's how we learn, right? When you're starting to ride a bike, you know, your dad can get on there, your mom, right? All right, this is how we do it. We pedal, right? And they can kind of hold you. But until they actually release you and you start riding that bike, that's when you learn how to ride a bike. Same thing with this market, right? We're going to teach you the foundational stuff, but when you do this, this is when you're going to learn. And in that learning phase, there's two things that I always want my students. One, low volume at first, right? Because why don't we learn with, you know, knee pads on, helmet on, in a parking lot with no cars, instead of jumping out onto I-15 or I-80 at the top of Parley's with no gear on and getting shoved down there on opposite traffic, right? So low volume and having stops protecting us, right? So stop loss. I'm always going to put a stop loss in my trades, no matter what I do. But that's only 1/3 of the trade. First is the entry, which all of us usually know how to do to get into trades, right? Second is protection. And then the final is how we're going to get out of a trade, right? And so there's multiple ways to protect us, right? This is a hard stop, and that's probably the easiest, simplest thing to do. Hard stop. I'm either going to win or I'm going to lose, but I'm going to be able to see, I see your green charts on YouTube screen. Are you also displaying your MetaTrader 4? I'm just switching back and forth to MetaTrader 4, so hopefully it's popping up. I hope so. Right now I am on MetaTrader 4 with turnkey. Back to green charts, hopefully back to turnkey. And so with this protection, right, the easiest, most simple beginning way, and what I actually prefer, is just a hard stop. Now, you can do a pending order, right? So an opposite pending order can be a protection, but if it comes down here and hits this, we just put ourselves into a hedge, right? And then we're going to have to deal with that later by price averaging, and that's where it starts getting a little more complicated. Doesn't mean it's not a great plan, but it's just another complication, right? Something else we have to learn.
So on your last trade that you had, before you did the trailing stop, what did you have on that one?
I just had a hard stop, just like this, right? And so right now, 5 minute, I'm just looking for the closest support resistance line. And you can just do that off of its technical analysis. You can kind of see down here, the markets kind of came down here and had a little hard time breaking through that. And so that's what I'm using for my stop loss, that if I can say, hey, maybe if I can get down here, it might kind of come down here, but hopefully it's going to want to continue up. This is kind of giving me a good warm feeling that if I'm down below this, great. Some coaches, some traders, maybe one resistance line away isn't enough for them. Maybe they want to come down here and look for the second one, right? And that starts depending on personal trading, how you want to do. This is
That's a demo.
yeah, this is demo, all right? And so, and it's turnkey. Turnkey seems to be a little bit lagging on their demo account. But this is just a hard stop, and you can place this maybe one or two. I like to cut my losers short as soon as possible, right? And it's kind of maybe a little bit differently. My percentages might not be as great, but I want to cut my losers short. If I'm wrong, I'm wrong, and I want to let my winners run, right? And so you could very easily say, well, I'm going for 10 pips. I want to go for 5. And we could target this at 5. And so now we have a take profit. I don't know why it's not coming up, guys. Sorry, Dave, on that. I'll kind of go back and explain stuff on green charts that I just did. We have people here watching, and so I'm kind of walking through the example. And so this could be your hard take profit, which is great. This is what I usually do in my trading, but I kind of want to get a little bit more advanced and see maybe if this market takes off, right, maybe we can get a little bit more out of it. 2 ways to do that. If this price gets above, right, we would actually be able to come up here and take this into a positive stop loss. Now, it's not going to let me do that right now because the current market price is below, right? So if I do that, you're going to get a sound. It came through my headphone, saying not going to happen, right? But the other thing we can do, and this is one thing I think sometimes students don't understand right away with trailing stops, right? Modify trailing stop, is you can actually have a hard stop loss and you can have a trailing stop on this. Now these are in points or micro pips. So 1.5 pips or 15 points. That means that this price is to shoot up, right? And it goes up 1.5 or 15 points. It's going to take this stop loss and break it even. Then if it continues to go up, this will manually move this up and follow that trade up, right? And so that is great The only trick about this is kind of trying to pick that happy medium on the distance, right? Because that's the balancing act, right? We want it short enough that it's going to engage, but we want it far enough so when the market starts coming back and forth, it's not going to take us out of our trade. And so that's the tricky balance with trailing stops. The other way is you can just manually move this up and then kind of watch it and maybe use the indicators, right? If our indicators are going to say, see if they get up, right? I like to a lot of times, if I got in back here with this buy trade, what's up, Hiram? Hiram's here. Maybe he can.
I just got a text that we weren't able to see part of it.
Yeah, so Hiram on this. So because this is the feed and it has to go through this, right? This is the sharing that I'm doing on this. So they can usually see this, but if I bring up this, they're saying they can't see it, even though it's swapping over. Dave, can you see it now if it swaps over? David? No. But you can still see green charts, David?
Strange. Pull up webinar. Jim. Sorry to interrupt.
No, you're good. Yes. All right. So webinar jam I have over here on mine.
And when you turn the screen share on, did you share your whole screen or just a certain page?
I just shared. I shared the whole screen, but I shared screen 2.
Okay, so that's the only one they'll be able to see.
So I don't. So they won't be able to see when I flip back and forth, though, right? That's what I'm trying to figure out.
So that, if that's on screen 2, they should be able to see that as well. So what screen is that one on?
This should be the screen 2. So they're able to see when I have this up. But when I switch back and forth to this, they're not able to see that. And I was trying to get him to put it on here, or this would go up here on my main, and this would just be, and I could just flip back and forth. And he's like, we can't do that. This is the feed of that. And so now I'm trying to get this into that, and it's like,
all right.
So I'll just go ahead and go back and explain what I'm doing on that. Yeah. So as we're saying, we got 2 options, right? We can do the trailing stop. And again, the trailing stop, the trick about the trailing stop is trying to find that happy medium, right? And that's something I never really got good at, right? And it frustrated me, and I kind of stopped doing it. But it's always an option. And we did have a successful one on that other account. Awesome. Next is the positive stop loss. And so what I've been kind of playing around with, let's say, so kind of my plan that I've been wanting to do with this scalping, right, is my signal of all 4 of these are down below. So my 30-minute and my 15-minute, right? That's a signal, not an entry. That's telling me that I might want to start looking for a buy, right? So we're oversold. Then I wanted to come over here and start using my pressure as an entry. And I like the entry when both of these are kind of pointing up. That's flat. I'll take it, right? So if I got into here and I was going to put my protection down below this, right? So we have a stop loss sitting down here. And instead of limiting, and it's not bad, guys. I'm telling you, how I trade in my live account is I would have taken, if this is 10 pips, I'd have been taking 5 pips. I'd have banked the profit in my live account, and I'm done, right? But as a trader, I'm always looking for ways to improve. And this is what demo accounts are made for. Right? This is where we put the practice in. And if I demo this for a few months and it's working better than what I'm doing in my live account, I'll take that over and put it into my live account. But not before. I'm never going to just start throwing stuff in. If you see the stuff I'm doing here and it's successful today, please do not just start throwing it in your live account, right? Because I'm going to see stuff and be able to manage things probably better than you are with the situations you're at, right? So always keep that in effect, and always understand that you want to try this out in a demo before you put it into your live account. So I would have sat here and I would have taken that 5 pips in my live account and I'd been done. Banked it, way to go, right? But that is a limiting mindset, right? Because a lot of times when you see this, we can see that 5 pips, it went above there. So what I'm trying to figure out and really trying to show my students, what have we become risk managers, right? Everybody's worried about this side of it, the take profit. But if you can switch your mindset and start worrying about how we manage the risk, you will definitely start winning in this game a lot more. Question.
Why?
Why?
I mean, because I'm just, if you're watching it, it's not putting in a stop loss. And you can go for the profit.
So are you saying, why would I put a stop? I always put a stop loss in. And the reason why, because if you're watching markets, especially right now with elections, Brexit, you could be on and you could have probably the most perfect setup that you've ever seen in your indicators. One news announcement can send the market 100, 200 pips against you instantly, right? Would you rather have had 10 pips lost and just say, oh, I lost because of the emotion of the creature? This is why
So you're only doing 10 pips and not
this is
20.
this is a scalping, right? I want to cut stuff short, right? For me, it's all about risk, not about the profit side. The profit side is going to come, right? If I can manage my risk, if I can become really good at losing, I'll be the greatest winner ever to run this. So do I.
I really hate it.
I hate it too.
Enjoy those profits I make.
Yep. And we'll smile. That's just a byproduct of doing the right thing, right? But the reason why these indicators aren't 100% is I tell my students all the time, this is a living, breathing creature. It's an emotional creature. Why is it emotional? Because emotional beasts like us trade it, right? We got the greed and we got the fear. Oh, it's going against us. Close out. Oh, wait, no. Oh, left, right? There's always that part of this market that we have to control. And so when I'm looking at my trading, and this is a mindset, because I was just like you, whether it's ego, whether it's hating to be wrong, however you want to classify it, I'm a very competitive nature and I hate losing. But when I went live and I was down 340 pips in my live account, right? For me, I was flipping out. I just got funded. It was a SAT trade. It was on a US yen pair and good gap. Put it in. One of the coaches, Dell. There's a reason why Dell doesn't protect his trades, right? Because he's way maxed out on his margin level, right? So he's trading a multi-million-dollar account and he's only trading 10 volume. For us, we like 10 volume. Ooh, that's $100 a pip, right? That's how we can make the money. For him, that's like us trading 10 cents on a $1,000 account, right? That didn't click, right? So I go in $1 a pip, which is the lowest I could trade on a live account. And all right, take profit. What are we going to do for a stop loss? Oh, we're going to let it run. These always come back, right? Well, great when you have the margin to do it, right? And so in 2 days, 48 hours, I was down 340 something pips, flipping out. At that point in my life, I said I'd rather have taken a 10 pip loss, right? And so that's the part is, especially at the beginning. And the one thing that Dell, Hiram, Brett, myself, Matt, we've played with this creature enough. Like I've only been trading live 2 years on the Euro USD, but I've probably back tested this currency pair 10,000 years of back testing. I've gone back from 2010 and back tested forward probably 100 different trade plans. And so I know how this pair, this creature works. I'm pretty familiar with it. And if I'm wrong, I'm wrong. I'd rather cut it as short as possible and just be wrong, because when I'm right, that part of it, I'm right. Right?
But if every one of your trades are losses because you didn't read the indicators right, you're going to continue to lose whether it's 300 or 10.
Yeah. So we're going to get into, I hope this comes up on the,
I mean, indicators were telling me that there was a buy, and I ended up buying, or it was a sell. And now it's turned against me, and it's up to 6 points. They're 6 points in the opposite direction.
yep. And so that's number 2. So these are my 5 keys to success, right? My biggest is number 1. This is how we become good losers, right? Risk management, right? And in risk management, this is where we start deciding what we want to do. So this is risk to reward, right? So if you have 5 risk, say you put in a 25 pip stop loss, right? And you're going for 5 pips, you need to be correct about 90% of the time, right? And if you can do that, out of 100 trades, you'll be netting about 340 pips. Okay? Now, if we start changing that, my mentality is more down here, right? And I want to get more down here. Let's say I'm risking 10 pips and I'm going for 20. Now, I only have to be right 60% of the time, and I'm actually making more pips out of a 100 pip trade. What if we go even farther where I'm risking 10 and I'm going for 30 pips? Now I only have to be right 50% of the time.
In that case, if you're losing 1 out of every 3.
No, this is risk to reward. This is what I'm risking to my reward. So I'm risking 10 pips and I'm going for 30 pips.
Oh, okay.
I only have to be right. This is my winning percentage. I only have to be right 50% of the time. And I'll be out of 100 trades, 940 pips. What about if you can start seeing where maybe I can risk 10 and I get 50 pips? You're telling me that we can't go back today and look for setups at a 40% win rate that we only risk 10 pips and we get 50 pips 4 out of 10 times. I promise you, I guarantee you, you could find that in our indicators. Because I know you can find indicators that give you 90% on this side of it. So I know you could find an indicator, whatever you're looking at, I know you could find it. Are you patient enough to wait for that setup to get this? And if you can, you only have to be right 4 out of 10 times. And you would actually be making more pips per 100 trade if you were right 90% of the time with 5-to-1 risk. I'm not saying either one of these is right. This is what I started out trading. I've naturally started to progress this ratio to the other side. How did I do that? Well, I'm starting to eliminate my risk as soon as possible. So I'm breaking even instead of losing. So that's getting my risk off the table, right? And then when I get those 4 trades that run in my direction, I'm letting them run, and that builds my reward side of it.
Yes, you gotta watch it.
Yep. And so it's something new. Yeah. Love Matt, right? But this is the mindset of it.
I can't see it yet.
And so now we go back to our indicators, right? And let's say whatever our setup is, this is the one thing. This is number 2, indicators. And number 3 of my success is back testing. So now it's to what do you see right? Some people see pressures better, right? Some people see majors and minors better. Some people see TNTs. Yep.
Well, not quite.
For this, but are you seeing a sell or are you seeing a buy?
I'm seeing right now a sell.
And I'm seeing a buy.
The problem is you don't want to do that because it's too far down.
Yep. So I'm seeing that this might be a buy. A sell might be coming, right? But right now, with our majors and minors, and this is things we have to understand about the majors and minors, right? The majors and minors do 2 things extremely well. So this is what I'm talking about. The market is a living, breathing creature, right? And so just right there, if I say breathe out as long as you can.
Breathe out.
Just breathe out. just like the market, eventually you're going to have to breathe back in before you can breathe back out, right? And so now the majors and minors do two great things, right? And sometimes we could be breathing out and we could hit a big support resistance line, and we just want to change the direction of our breath, right? Other times we could be breathing out and we could be taking a breath in, and we want to continue the way we were just breathing. So the majors and minors do two things very, very well. One, they pick up on this switch right here. What we have to determine is if that switch is just a little breathe in and then a continuation to the long side, or if it is a reversal, right? And so now we're starting to use the indicators to try and dictate that, right? And what did my trade do? Looks like we're going to lose that yen trade. No worries, though.
So you're only doing one trade each time?
Usually, especially scalping. If I'm scalping, that all based is off of what my risk management is, right? So for me, I'm saying 1 to 5%, right, is what I'm willing to risk in a trade day. And so when I first started, I was working, and so I had an opportunity window to trade. It was from 6:30 in the morning to 9:30, and then I had to go to work. And so at that time, when I first started, I was like, all right, during that session, I'm willing to lose 3% of my account. And so if I'm willing to lose 3% of my account, let's say we started out with a $2,500 account, and I'm willing to lose 3%, right? That's $75 that when I'm sitting down for those 3 hours that I'm willing to lose. Okay? And so based off that, now it's going to be based off what do I want to trade? Where's my stop loss? So I had a plan when I started trading that my stops were about 25 pips away and about a 5 pip take profit. Perfect. So with that, that means I could look for 3 trades in the morning. Okay? Because if I have $75 to lose and I'm trading $1 a pip, I could have 3 trades, right? Perfect. And so now I go, when I was in that session, I'm going to look for those 3 trades. I'm going to have my 25 pip stop loss. I'm going to have my 5 pip take profit. If everything goes bad that day, I only lost 3% of my account, I can still trade tomorrow, right? And we know that we're going to have bad days. It's not, I trade about 80-something% on my live account. Awesome, I win 83 times out of 100, but guess what? I also lose, right? And so now that determines on my win to loss ratio, does that 83% keep me profitable? If it doesn't, I got to figure out how to change my risks, right? And that was that sheet that we were looking at, those 5 keys to success. When I had that 5-to-1 ratio, so I was risking 25 and going for 5 pips, if I wasn't trading at 90%, my account was declining. If I was trading 83%, it's not working for me. I would lose. I'd eventually blow that account. And so what do I have to fix? I either have to get better entries, be more patient, and wait for a better setup so I know it's going to get my 5 pips 90% of the time, or I adjust my risk to my reward ratio. Because a lot of those setups, if they went, they had very little give back. And this is what I started noticing. When I was right, a lot of times there was not much give back. Every once in a while, yeah, it would give back and then it would go back up and it would hit. And that would be taking into that 90% win rate. But a lot of the times, so right here, we were talking about sell. So this is my signal. I come over here and I start looking. Whether you want to use support resistance or whatever you want to do to get into it, right? Let's say this breaks above pressure. We want to get back into it, right? And maybe you're very excited about this trade because the longer term pressure was up. So So maybe we get into this entry, right? I wouldn't have got in here. I wanted to get a little bit better signal with my pressure. But if this is what we're targeting again, let's say 10 pips and we're going for 5. Well, that worked out pretty well, right? We would have got out on this trade. It only went 3.8 pips against me, right? I didn't even have to risk this 10 pips. And so if you can get really good about one, like Matt always says, right? Well, if we pick right, if our indicators are down and maybe it broke off a support resistance line and we wanted to get into this trade, right? And the next 5 minutes, depending, I always tell my students, the only thing that changes when we start looking at time is usually how much we're going to have to risk and how much we can possibly gain, right? Now, if you want to be a scalper, which is fine, that's how I started, and you want to use these small charts, do yourself a favor. When no one else is looking at the market besides you at 3 o'clock in the afternoon, don't be pulling scalping trades off, right? If you want to scalp, we want to scalp when people are looking at the market. So it worked out really good for me in the morning because that's when a lot of people are looking at the market, right? As I started getting busier and coaching, I went to bigger charts because a lot of times that could follow. And how's it going? Think it's learn to trade, exclamation mark. Yep. And so these times don't. I can show you this double cross on a day. I can show you a double cross on a minute, right? The only thing is, usually where I'm going to put my risk is going to be a lot bigger on a day. And that day, it's going to be longer for it to come out in a 5 minute. But these patterns, right, I usually don't care unless I'm scalping that I'm making sure it's in the morning when I'm watching the market and it's moving. But so let's look at Matt Watts, right? I'm going to risk 10, and I'm not going to take a take profit, right? So always protect our trade because we don't know if some news is going to come out and shoot down. And I'd rather just lose 10 pips instead of 250 pips, right? Yeah, still I'm going to get upset, right? I was in this room with a student, and probably one of the greatest setups I've ever seen on my trade plan happened at 11 o'clock with the student. We took it. Take profit, stop loss, everything's great, right? About 10 minutes later, that market just blew up. I'm like, what in the crap just happened? And I looked at my student and I said, we looked at calendar. Did we miss something? He's like, I don't think so. Well, let's check. Go to Forex Factory. Nope, clear sailing. I'm like, something should have happened. So I have FX Street that I look for news. Go there. Nothing. Like, what the crap? So I go to internet. What's going on? Trump came out and went against Powell, right? I understand why he's doing it, but no one knew it was coming. And so the indicators can look the best you've ever seen, and it could blow up because of something emotional. So that's why I always protect my trades, right? And before, when I first started, because I didn't want to lose, right, I was like, if I can put this stop farther away, that gives me a greater chance to win this little position, right? So if I can put it 25 pips away, that's going to make me feel good about myself, right, and get my 5 pips. But I started having a swing and a mind thought. And like I said, it's fine. Hiram trades that way, and he's very successful. That's the whole beauty of this. You get to trade how you want to trade. But if you're trying to trade some way like Hiram or somebody else, and it's not working, that's when we have to say, well, I need to figure out what's best for me. Like, I hope nobody on here watching this webinar sees some of these examples, see some of these trades, and just say, oh, that's how I need to trade, and he starts doing it or she starts doing it in her live account. That's a recipe for failure because I see the market way differently than you do. I look at a double cross way differently than you do, right? So that's when you have to come in here and practice it. But if we can get good at risk managing and now really start focusing on what we want, how much we're willing to lose, and how we're going to manage that risk, and not really worry about the other side, and it kind of seems like backwards thinking, right? But if we got into this trade right here, right, and we risked this, in the next 5 minutes, it was up. All right, nothing too great. Probably going to leave this. All right, we're doing okay. We're probably checking it, looking at our thing. Oh, I should have closed out at 4.3 pips, right? Now it's 3, right? That mind, that anxiety starts coming over. And now, boom, we read our indicators right, and what we thought was going to happen, happened, right? And now this is pretty cool. This is a better than a 1-to-1 ratio, right? And so you could close that out. Awesome. Or we can just take this risk off the table. And so this is one thing too I want people to start understanding about trading is it's all about what we lose, not about what we win. And if I had risked 10 pips here and I take this and I put it to a 3-pip trade, yeah, if it comes down and it hits this, my account balance only grew 3 pips, right? But how much risk did I take off the table? I took off 10 that could have definitely lost, and I added 3. So I just went from a -10 to a +13, even though 3 pips only shows up in my account, right? So I eliminated 10 pips of risk and got to a +3. The worst thing that's going to happen, and this is what I did on our first trade in our one account, the worst thing that's going to happen is I walk away with a 3-pip scalp. But what happens if this market takes off? All right? Because even on this, sometimes if it picks the right trend, even on these little things in the morning, I've back tested this Friday from the first of the year. Sometimes it's up 60 pips at 11 o'clock. Now, sometimes it's down 60 pips. Sometimes it's in a consolidation. It just bounces back and forth. And those days I might break even. But I know 2 things. If it went against me 60 pips, I lost probably 5 to 10 pips, period. That's the end of discussion. If it gets in a consolidation, maybe if I was targeting, or even if I did this, maybe I'd win, 1 to 2 pips when I was just breaking even, right? And I'm going to take those because 3 to 4 out of times, it's going to run 60 pips. And I want to try and take as much of that 60 pips as possible. Now, I don't know what's going to happen today, Friday, right now. I don't determine that. I don't have a big enough bank account. I don't trade a large enough lot size. We have to understand how to play this, right? The greatest way that I've found out is eliminate your risk as soon as possible, try and break even as soon as possible, and then see if you can catch those 3 to 4 that run in your favor. And you can do it scalping. You can do it long term. You can do it either way you want. Because here, we could say now, I had 8 to 9, 10 pips. The first candle, and usually a signal, I always want to wait 2 to 3 candles. I want to see what I'm seeing to kind of at least give it a little bit of maturity to grow, right? And so we got in on this signal right here. There's 1 candle, 2 candles, 3 candles. I want to get this risk off the table, right? So let's say we just move it up to a nice little 3-pip scalp. The next 5 minutes, it's up. Awesome. This is what I've been playing around with. This is our pressure. And if I'm scalping, I probably want to start following the top of the pressure line up. If I'm more of a long term, maybe follow the bottom of the pressure line up. But now it's just a game that every 5 minutes, I'm just going to try and lock in some pips. And we might have stayed out of there, but now it's kind of probably getting to a support resistance level. And now we've locked in 8 pips. Oh, can't move it up anymore, and we'd be out. So 9 pips we locked in, right? Awesome. It was better than our break even, our 1 or 2 pips to cover spread. It would have been better than what I would have done if I was targeting. Remember, usually how I trade live is I target, right? So it would have been better than that, and I would have doubled this, right? Now, those ratios that we were just talking about, where you might be that 5 to 1 because you hate to lose or you want to give it room to try and hit your take profit, which is great. Just make sure you're doing it at 90% accuracy, right? Now I've just eliminated that to almost a 1 to 1.
It seems to me like they all move like 10 pips down.
And you'll find that out, right? On a 240 chart, because I use this same setup with I do a 120, 240, 120, and a 60, right? And so maybe back here, again, signal. This is a signal. Now, just because this is all maxed out right here, doesn't mean I'm going to be jumping in for a sell, right? That's just for me to say, hey, maybe I should start getting a little bit more serious about looking at the market, right? And we can see TNTs are kind of starting to get up there. Looks like majors and minors kind of won the race, but TNTs are starting to max out on our thick orange value. Now pressure is screaming up, right? So this is what I'm telling you, and this is something you have to get very used to with the majors and minors. What do? They do two things really well, right? They detect when you get up to a support or resistance, and they can detect whether it's going to be a reversal or just a little pullback, right? And so that's us now how to dictate what we're going to do. So again, the majors and minors, let's say if this was a market, the majors and minors are really good to pick up this point right here and this little bit of reversal, right? That's one scenario. And a lot of people say this is counter trend trading. Great. I don't care what you call it, but I'm telling you, you can make some money doing it, right? But we have to be aware of that, right? I'm not going to see this up here after this has just gone through this big trend. And however you want to determine trend, I can pull in candles right here. And it looks like since the other day and a half, this market has wanted to go up, right? So if I know that, one, I don't want to be putting a 25, 30 pip stop loss if I'm doing a sell here. Why? I know that my majors and minors can pick up sometimes when it reverses, right? But if it does reverse, it usually doesn't go against me very much. But if I'm wrong, that's when it goes against me. So why eliminate my risk right at first and say, okay, one, either stay out of this counter trend trade and see if it pulls back and then breaks through your resistance and you have agreements with your indicators and jump back in on the high side. Or two, if we're going to take this trade, start saying, I want to make sure my risk is not that great. What? Oh, thought I'm too loud. No, sometimes I'm just a loudmouth and just carries. And if that happens, if I'm right, like I said, we'll look at this example. If I'm right, usually that rundown is right. And even back testing this on at 30, 15, and 5. There's been days, like I said, barely goes against me and it goes 60 pips. Awesome. I manage my risk. There's other days that it goes 4 pips and it goes 60 pips against me. All right. I got out of it. And if I believe that that's going to continue down, I can jump in on that side and write it down. Right. But I have to become really good at risk management. I know. I mean, I've only put in like one trade. This is over. I'm a coach.
He's a coach. He teaches.
I know. I teach. I love
I
it.
teach all day, every day.
I love it.
No, that's fine. I'm just where you're at.
And so, one of my accounts, I'm up like,
What's your total?
no, nothing. Like pips. Like 3, maybe.
3 pips?
3. I don't even know what this. We put in another trade in one of them. It looked like it was going to lose. So one's going to be up 3 and the other one probably down. But we got a long day. We'll see if we can get on side of a trend.
How long do you trade for?
Till 11. So this here, right? I'm happy anyways. I get to win a trophy. There's 3 of them. So no matter what, I'm taking a trophy home, right? We're all winners. So this is a signal. Then I'm going to come look over here. Looks like it's looking like there's going to be some rejection off of this.
So with your kind of trading, you don't necessarily trade any of the ones that move fast.
For me, no, not anymore. But when I started, I was scalping, right? That was based off of what I was able to do at that point in time, right? So I had this opportunity. I was working 70, 80 hours a week when I started doing this, right? But the nice thing is I didn't have to go work until 10:30, 11. So I was able to trade from 6:30 to 9:30. And so in that time, at first, if I would go back and now what I'd known, I'd probably still do what I do now. Maybe look for bigger trades and just let them run. But at the first, it's the newness, right? It's the new toy. You want to be in it. You want to watch it. You want to click. You want to see wins. Hopefully not see losses, right? And so I was scalping at first. So I was just using smaller time frames. The more I got used to it, the bigger I just build up those time frames, right? And like I said, this is a 241.20 and a 60. We're looking at a 30.15 and a 5. The only thing that's going to be different is where my risk is going to be, right? And so if you get up to a bigger chart, your risk is probably going to be bigger. The nice thing I like about majors and minors is they naturally kind of build in. Like I said, they're really good about picking out these support resistance lines, right? And so I naturally, when I see my trade setup, already kind of know where I'm going to put my protection. So when we were looking on the 5-minute, it was about 10 pips away, right? Now we're up to a 60-minute, about 25, 30. If we go to a faster moving pair, this could be 50 pips up, right? The higher the movement, the higher the volatility, you have to understand you're probably going to have to risk more, but you should be able to get more, right? And so if this is it, we're going to get in this trade, and let's change the mindset instead of saying, well, hopefully I get 5 pips out of here, and I'm going to win 90% of the time, and I'm going to risk 25. Hopefully I don't have double losers, because that makes me feel like I took 9 steps forward and I have double losers and I just got knocked on my butt, right? So we're going to have now mentality. I always protect every single trade. If that's the only thing you learn from today, that you better put a stop loss in, and it's probably better to put a closer stop loss than a farther stop loss. Goodness, I felt like this would be an accomplishment, right? And I understand this. I used to be that guy. If I can just keep pushing this back farther, I'm going to start winning a little bit more. But you better have your wins start matching how far you're pushing this stop loss. Because if you start pushing this 50 back and you're only going for 5, you just made a horrible bed you have to sleep in. You better never be wrong. Because if you are, that one loss will wipe out 99 trades. Right? So again, if I can teach my students not to win, but how to manage their risk, this would be the greatest decision they've ever made. And it's a hard concept to do. We want to win. Everybody wants to win.
The psychology of that can be tough when you
It's
miss
hard.
your stop loss by 1 pip. You know?
Yep.
Yeah.
If you had put your stop loss 1 pip more,
More,
it would have gone back and
It would have gone back. But then the next time you do it and it's 1 pip, it's like, dang it, hit it again. If I just put it 1 more pip, dang it. If I had put it 5 more pips, dang it. If I put it 10 more pips, dang it. Then you're starting to throw trades in where you have a 100 pip stop loss and you're only going for 3 pips. You have to, that's impossible. You'll never win, right? And you might feel pretty good because you got 15 trades, 20 trades that you won, and you're knocking out those 3 pips. But then something happens in the market and it hits that 100 pip stop loss. And not only did you just wipe out all of your wins, you're in the hole and you're just like, what the crap, right?
Can you mitigate that with your lot size?
With your lot size, you can minimize what you're losing per dollar, but it also, that's how much you're winning per dollar, right? So that's the equal size of it. So how we minimize that is we bring our risk in and we let our winners run, right?
Right.
Or if we're not good, because it's a skill, like he said, he learned from Matt, right? And this is Matt, right? This is what I learned from Matt too, right? And so I've seen this from Matt, and I'm like, this is a pretty cool concept, but this is still a skill. You have to get really good at it. And a lot of it is a mindset, right? That you understand that most of your break evens are going to be very low, but all you're waiting for is that 2 to 3 times when it runs 60, 70, on bigger charts, 3, 4, 500 pips, right? And you're trying to, again, start thinking about if we can get that risk off the table. Yeah, we might have only won 1 pip and it only gives our account balance 1 pip. But whatever your risk is, if it was 25 pips, we really just went 26 positive. Because now you always have to risk something in this game, right? How can we minimize this and get it off the table as quick as possible? And yes, you're probably going to have five trades that you win 2 or 3 pips, right? But you didn't lose 25 pips. You didn't let them run until they lost, right? But those 2 or 3 that run the 60, that's going to start bringing your risk to reward ratio to a much better place. And you don't have to be right all the time in that, right? I'll bring that screen back up. But let's get back to this example right here. And we risk, let's say we risk 30 pips. And it's an hour chart, so the next hour we come back. And again, I want to usually give it a couple, 2 to 3 candles. Beautifully, 2 to 3 candles. If we would have just put a hard take profit, we would have been out, right? And not bad. I mean, I wouldn't have risked this. I'm usually a 2 to 1, right? So I'm risking about 30, and I'm going for about 15 pips. So I actually would have been out in the first hour. And that's not bad. 2 to 1, if you're trading 75, 80%, your account at the end of the month is going to keep going up. And I'm telling you, it'll probably be the greatest decision you've ever done when you hit a max funded account.
So I missed that. The 2 to 1. What's the 2 to 1 ratio you're talking
So 2 to 1.
You're
So
trying to get 15 pips. Your
Yep.
stop loss will be 30. Your take profit will be 15.
yep. So I'm always looking at mathematically what my win percentage is, and does that match my risk to reward? Yes.
I got a question for you. I'm just looking at this example you're going through right here.
Yep.
And I'm trying to evaluate myself and where I am at
Okay.
this point. So where your black arrow is right now, this was a normal trading day for me, and it was in the morning, and I don't have to go to work, so I could sit in front of my screen as long as I decide I want to.
Perfect.
A lot of times I will take trades, and I usually won't put in a stop loss right at first because I'm going to be sitting there watching it.
Okay.
And I can see.
Mr. Jason Hall.
Oh, there he is.
What's up, buddy?
Hello, everybody.
Finish your question. So anyway, I can kind of see what's going on. In this particular case, I mean, I would have seen this go down to your black arrow and thought, cool, I wonder how much farther it would go down. But when you got to that next green candle and retraced, I'd have clicked out of the trade.
Okay.
I said, okay, that's fine, that's enough. Is there any way to know that, hey, that's just a little glitch and this thing is just going to keep going, because it would have been nicer to get to where it is right now? That's what I'm saying. Can you determine that based on
No.
you just never know?
Nope. And it starts going back with back testing, right? The back testing is where you start getting the nice thing about this market. So there's 2 things that this market that you love to hate, right? You love that it's mathematically, it's the fear, the greed. This market is very like cycles, right? It runs in cycles. And so with that being able to go back to back testing, it's not we know every single time, but we know at a great percentage of what can be right. And then we start thinking more like a casino instead of a gambler, right? And we want to start thinking about this as the big guys think about it, the majors, right? And we want to start saying, I know we're going to lose. You go into a casino, you hear jackpots, people yelling and screaming, they're winning this, right? Awesome. They'll give those 1% away every day, every year, all the time, because they know that on the average, they just keep taking a little piece, right? Their percentages are in their favor no matter what, and they're going to win in the long term. And so I used to do the same thing when I started, right? And it was even worse. The funny thing is we go back to this trade and it broke down. It's a red candle. Beautiful. Realistically, what happened is this probably went against us 3.5 pips. And you probably just thought you made the worst decision of your entire life, right? Dang it again. Every time I click the button, it goes against me, right?
That always happens.
Always happens, right? Like I said, I like personally, if my signal, whatever it is, if it's a double cross, I want to give that double cross at least 3 to 4 candles. Okay. And that just became with the watching it, right? When I saw it, and a lot of times when it happened, like this is what got me on my journey, right? Is this little double cross. That was the whole thing that started me doing this trade. And when I get in this double cross, my goal is I want it to go down through the channel. That's when I make my money. Now, again, we bring up the majors and minors are very good at doing two things. One, hitting a good support resistance line and continuing to run, or two, picking up these little hiccups, right? And we've seen it. Sometimes this double cross goes all the way through, and you think it was the greatest day since sliced bread. I just made money, right? Other days, that pressure right there wins out, and these will stay up here, right? And usually you continue your trend up, right? So for me personally as a trader, I started to realize that. And I said, okay, I can one, and this is where I started getting that targeting, right? And it was great. Targeting is fine. That's how I trade right now. I'm trying to advance to this next level, just like you. Oh my, coach is trying to learn something, right? But I always want to become better in anything I do in life, right? And so I could stay nice and happy. I trade 83% with a 2-to-1. My account balance keeps going up. Good days, right? But just like anything, when this doesn't hit this and goes back up and it goes through, like anybody else, it's like, oh, I could have got 47 pips instead of 15 pips, right? So your mind starts racing. And it's not bad, right? We're never going, unless you can predict the future, you're never going to be able to get the max run, right? So get that out of your head. But how can we start maybe catching these runs, right?
Yeah, I'd take the 10 pips and give up the 40 pips every time.
But until you do
Never hit a
that,
stop loss.
until you do that for, well, you're always going to hit a stop loss. Until you do that for a year and a half, right? You're like, oh, I'd take 25 pips every single day until you do it for a year and a half. And then you're like, it's about enough that I've seen this sucker when it runs 300 pips. How do I start getting that 300 pips? 25 is nice, great, but how do I get the 300, right? And so that always will come, right?
That's something I can't understand is how far do you let it go?
Right? And this is Matt's, right?
I mean, yeah, you start bringing stop loss down to a stop profit, but the thing is still, how do you get it to?
So different ways, right? You can either start going technical side, right? So we know, right? If I ask you, what's an uptrend? What's an uptrend?
Higher highs and higher lows.
Right? What's a downtrend?
Lower highs and lower lows.
Okay, so you're asking, where do I put these, right? One sec. You mentioned achieving a max funded account. What is that? I just started my live account. All right, David, one sec. A max funded account is what the corporate funds you, and depending on what program you did, it's either 50,000 or 100,000. So as you continue growing or learning and trading, and hopefully being profitable, every 90 days you're able to put in a review. And if you're doing well, and it's not even doing well, if you're just protecting the equity, they'll add money to your account until you get up to that max funded. All right. So this is what we have to determine. And I love the indicators, right? I had no idea how to trade this market when I came in here. Zero. No stocks, no nothing. That's why I did this, is because my wife and I have been doing pretty well, right? I've been able to make money, 6 figures every year. Awesome. We got that covered. But like an idiot, I never put any money away, right? So at 38, when you're making money at 28 and you don't have a care in the world, but 10 years, 38, you're like, man, I'm this is probably only going to last so long, right?
You're going to want to retire.
Right? And I had buddies that did financial stuff, and I started asking them, and they said, well, to continue your lifestyle, what you're living, you're probably going to, from 40 to 65, be putting away about $1,200 a month. And I was like, all right. So I told my wife, well, let's pay some bills off. This is when I was 38. We'll pay bills off, get the vehicles paid off, and we'll just transfer that money into that, and we'll just continue it like a bill for the 60 until I hit 65. Then I heard this on the radio. I came and saw that these indicators, something so simple, a double cross, could make me money and I could manage it. Game on, right? And then talking with Hiram. Hiram's my COD, and Hiram did some amazing stuff. But understand with Hiram, he was able to immerse himself in this for 17 hours a day, right? A lot of us, me included, did this as something on the side, right? Part-time, right? Which is fine. Learning curves happen with time. Hiram was able to hit a multi-million-dollar account in 7 months without even using a funded account. Anybody want to know why he was able to get his learning curve that quick?
Yes.
Yes?
Yeah, I do.
70 hours a week. He hit this market. He back tested. He traded. He would trade the open of the euro, go to sleep, take a nap, get up and trade the open of the US. After that was done, he would back test 12 hours. He would look at his trades. I'm talking about 80 hours a week. He invested time into this.
He still does.
He still does.
Not as much time, maybe. I don't know, but
No, he's still back testing, do it, right? He has a program that will run these logarithms through and spit them out. Do you know he still manually back tests it? Because he heartily believes he can do it better than a computer.
So what's the concept of back testing? I've heard the term, but I don't know that I understand what it means.
So the nice thing, I always say back testing is like our degree, right? So just like you had to study for a bar exam, right, and take your bar, back testing is what we're able to do. So back testing is just going back and looking how the indicators looked at that point of time. And
When you took a trade.
Or when the market was, right? So right now, this is actually back testing. See, we're here red.
Right.
So what we're doing right now is back testing because this is not live right now. This is red, right? And so I'm saying that back at this day and this time, when this candle posted, all these posted here, this is what this candle looked like, right? It actually had been, I started this for my signal, right? So this is kind of what the market looked like. Then I go down to my 60-minute, and you can replay this to see what this looks like. Once I get my signal, I'm just looking for my entry. I don't really care what those charts look like anymore.
And your signal is?
My signal to start looking for a buy is just the majors and minors being oversold. My signal for looking for a sell is my majors and minors being overbought. So if I was going back, if this was live, and I came up to this chart and I saw all these in the overbought position,
right,
I would say there might either be a little hiccup down or there might be a reversal. So that's what I'm looking at, right? And so now I want an entry into the market. Just because this is saying there might be some selling opportunity, I'm not jumping into my sell, right? This is a signal. I have a trade plan based off of 240 clean pressure. It's only pressure, nothing else. I have students trading that. They're averaging about 520 pips a month. One indicator, 7 pairs, nothing else, right? Sounds great, but you better be able to do what he's doing. And that's usually when people fail. And we can talk about that in just a minute, right?
Yeah, keep going, please.
So once I see this signal, I'm looking for a sell. And again, keep in mind with our majors and minors, they do two things well.
So
they
is
can
it a double cross then that clues you into this?
I'm looking for pressure after that, right? Double cross is just maybe a little bonus additive, right?
Well, you got a double cross and you got your thick orange down, but your pressure's up.
Well, on my bigger chart, remember, this is one thing, and this is kind of what we were talking about. Red's on top is starting to gap, so there's probably going to be some slowing in this movement down. The overall trend is pressure, and so this is why I've gotten really good about putting my stop close. Because you're seeing it right, but this is pressure on 240. This is pressure on my 60-minute. So I'm using different indicators on different time charts to kind of come up with a signal that I like, right? And so you're looking at 240 pressure and everything says up. 100% agree with you, right? There's some things here that I do like. Red's on top, red's on top, red's on top. So that could be another signal that we could have some down pressure.
So you got 60, 120, and 240.
Yep, 240, 120, 60. Okay? And so now based off that, this is stuff, a lot of people might call it momentum trading, but I'm trying to get this built up, right? And even if you look at one chart, Your signal on your 240 would come first because they react the fastest. And then you could have an entry maybe based off of this, right? Because it's a little bit slower. And then you could kind of dictate whether I want to stay in a trade if this starts rolling over, if this starts going back up, maybe if I lost this trade, maybe these break through and go back up and I want to get into the uptrend, right?
So you got the pressure flat and green on top of red or red on top of green here? Is that what you've got?
Red on top and then green, and then price breaking
I can't
below.
see the green. Is it right there? Oh, okay. I got you. Okay.
All right. So, and an entry could be whatever you want. I've just kind of been playing around with. A lot of people will use pressure on bigger charts and then drop down to majors and minors as an entry, right? Great trading strategy. Awesome. 5 minute major and minor to me is I love the majors and minors, way too fast for me, right? And always see I never got, and one of my mentors is Hiram. He probably positions with the 5 minute better than anybody I've ever seen. I've sat and watched him do it hour after hour after hour after hour. I never got it. Never. It's either I was too early or I was too late. Pissed me off. I stopped doing it. Right? Doesn't mean it's wrong. Hiram's successful at it. Just means I didn't see it. Fine. What do I see? Right? And so I got away from the 5 and went up. But now, when my coach showed me this clean pressure, I was like, what if I start using a 5 minute or a 60 minute as my entry, but using my bigger charts, majors and minors, as my signal? Right? This is still in the beta testing, right? Trent. Yeah, he's here. He's up in Idaho, and he showed me this. So when I first started, I started out the pro funding, right? The lowest one. That's what I was able to get into. And I said when I was able to upgrade with the money I made off of trading, I did. And so I was actually already coaching, and I was able to upgrade. And so my executive training was probably a little bit different than a lot of people that just sign up for executive. But Trent's like, hey, let me come down. I got some stuff I want to show you. And I was like, cool. I got some stuff I've been wanting to work on. And this is when he showed me clean pressure, right? So it was about 7 months ago. And so now this is my entry. Let's go back to where our risk management. So up here, 30. And like I said, I usually trade about 83% with a 2-to-1, right? And so 83%, and this was 30, I'd be going for 15. I would have got it that next candle, depending on what broker you're trading with, right? And then I'd have been out, and I'd been happy. But the beta, and this is kind of what Matt Watts talks about, is what if we can become really good about risk management? And so what you were saying, I usually give my signals, whatever my entry signal is, I want to give it, 3 to 4, 2 to 3 candles, right? Do I hedge? I don't anymore. No, I've done it. I know how to, but doesn't mean it's right or wrong. I just,
We don't have to go into it.
Yeah.
I was just wondering.
I don't, just hard stops. So we have time. I can get into the reasons why I do, but it's not wrong. It's just more advanced, right? And it's a way more advanced skill, and it's just more practice. So I've just found this is easier, and I've just got to the point of I lost.
I stopped it.
Yep. Yeah. Once you get it, it's good, but it's advanced. But now let's become risk managers instead of just taking profit, right? Because I've started to see that even though I'm winning 83% of the time, I'm still limiting, right? That's still a limiting mindset. When you say I'm only going to take 15 pips and you see that thing run 130 pips, you start figuring out, like you're saying, oh, I'd love, just give me 10 pips a day. I'd be the happiest man in the world. Yeah, for a little bit, right? Then you're like, after you keep seeing you win 15 pips and you start seeing those 3 to 4 times run 130 pips, it's just natural. It's like, how do I get that, right? And we're never going to get the full amount, and this is the give off. This is the math that I'm trying to figure out to see if it's going to be worth my time to let trades run, or if it's just my time to keep doing what I'm doing. Good old rusty trusty, right? But now this is the math that I have to do, and I'm doing it in demo accounts, and I'm collecting the data. So got our signal, 2 to 3 candles, right? And a lot of you would probably be saying, man, I just risked this, and I'm at 20 pips, and you're probably going to close it out. Great. Been there, done that, right? I've tried this on a day. I'm not ready to move to a day chart yet, right? That thing blows my mind sometimes, right? Get a good day, come back, and you're up 89 pips. It's like, how do I let this thing keep running, right? Close it out. So those are things you still got to work with this trade plan. But now, if we risk 30 pips, here, right? And we now say that this has gone down, and I want to see if I can let this trade run. Let's take 30 pips off, and let's move this down to a positive stop loss, 3 pips. Most people, when they start out, what do you usually go for pips? 3 to 5? Scalping, right? That's usually what everybody starts out with. 5 to 7. Beautiful. If you're like 5, let's move it down to 5 pips. Now the worst thing that we can do on this trade is make 5 a win, right? And not only was it just 5 pips, this is the mentality you have to start understanding. Yeah, when my bank account or my account balance shows a 5 pip win, but did I only win 5 pips? No. This is a 35 pip win. Why is it a 35 pip win?
20 stop loss.
Because of this 30 stop loss, right? We always have to risk something, period, right? And so, yeah, my bank account, if this comes back up and hit, I only have 5 pips, right? But I could have lost 30, right? Yes.
So when you're putting your stop profit, how soon do you put it below what you bought it at?
2 to 3 candles. For me, right? There's so many different ways to do it. But if I get a signal, I've usually seen that if my signal within 2 to 3 candles, first started out with majors and minors, usually 2 to 3 candles, that will get down, depending on what time chart it is, right? But usually that double cross, if it's going to work, 2 to 3, it's got down through the channel, right? And so if my signal is that clean pressure, I want to give that signal 2 to 3 candles to work, right? And so if I'm going to start looking, and you can see that this actually worked in one, depending on who you're using. 15, you would have been out on FinPro. Still would have been setting in until this next candle with Capital City, right? And so 2 to 3, and then we're going to reevaluate, right? When I first started, Kevin used to teach the light class. He would say about 5 to 7, usually a signal. I think the videos now say 3 to 4, right? Usually it's good to about 3 to 4 if you watch the new videos. So great, 3 to 4, right? But we went down 3 candles and we're up. So now this is the stuff we have to start thinking about. And I've been thinking about using the indicators as to how to move this down. Or we could use, if this kind of keeps going in its downtrend, we can look for these pullbacks and these continuations, right? But let's do, we'll say 3 pips. We took profit. I'd at least move this to like a pip because that covers commission, right? So a pip, we'll say 3 pips. Next candle kind of came up, all right? Next candle, money. Now this is kind of what I've been bouncing back and forth. Do I want to kind of use my pressure line and follow my pressure line down, right? This has kind of been a little hiccup, so we're kind of looking for maybe short support resistance lines. We can kind of see back here something. Maybe we want to keep it above here. This is what you have to dictate as a trader. Not one way is right. How do you see it and how do you make it the best for you, right? I love the indicators. Let my indicators dictate what I'm going to do in this trade. All right. You can start looking. I know Matt Watts says maybe we're getting close to a support resistance line. And maybe you want to start, maybe I'll get out and then maybe to look for re-entry, right? That's just.
So there is some art and skill to where exactly are you going to put that profit stop? Because if you guess wrong on that profit stop and it turns around briefly, I mean, it'll kick you right out and you'll miss out on.
Yep, but
I've had that happen to me just because I didn't.
But I'd rather do that than,
Well, yeah, that's way better than being negative.
And that, and that's, yep, there is definitely an art and skill. It is definitely an art and skill.
And then you're talking about, and I know I've asked you this before, but repetition is good. So you talked about you got your signal. Was that where the pressure separated and the green starts to flatten and then
So
go down before the red does.
The signal on this trade plan, right? And it could be different, right? Jason Hall loves the thick orange, right? That could be a signal. Beautiful. And you can kind of see that really what I'm doing is almost doing what the orange crush is, but instead of using the thick orange and the majors and minors in the half chart, I'm using the majors, minors, and the pressure, right? These are ratio based, right? This is a 4-to-1, a 2-to-1, a 1-to-1.
Right.
So this is why Jason loves these charts, because this is a 4-to-1 and this is a 2-to-1. Well, if we go half of this, these should line up really well. Well, same thing. If you go 4, 2, and your 60-minute pressure, you could probably get a pretty good lineup on all of them, right? And so the signal for me is just my majors and minors. But you could use the orange crush as a signal, right? And you could use your this coming down as, let's say we did orange crush. We getting up here to the orange crush, right? Yep. What is it? Negative. Doesn't he do 20 to 0 and 80 to 100? I think is what his signal, what he's looking for, right? All right. Then he comes down to his half chart, right? So now he's looking at his 120. Bam. He's in, right? Let's play it now. I'm going to, instead of using my 60 now, if I'm going to do orange crush, put this up here. And the same thing I tell you is, what are you expecting when you get a double cross? I'm expecting, for me, what I see, right? I'm expecting when I choose right that these go down through the channel. So maybe that's your signal where you want to put your take profit, your positive stop, right? So we go, and we say usually 1, 3 candles. We're down through, right? 3 candles. And maybe not as good as what we expected, but we didn't limit ourselves, because I would have done this. 25 pips, 15 pips. I'd have been out here, right? Fine. It's awesome. If it works and you're happy with it, do what makes you money, right? But again, after seeing that for a year and a half and seeing these things keep running, my mind is, how can I get more out of it, right? So maybe now they're down here and we know that this can stay down, or we know that this can come back up. So what should we be doing? Getting the risk off of the table. Because even if we put this down to 5 or 10, whatever, yes, if it comes back up and hits, our bank account, our account balance says we only won 10 pips, but we didn't. We took 30 pips off the table. That's a 40 pip win here. And you're giving it the opportunity to keep going, right? But this, at least, guys, 1 pip to cover your commissions, right? If you break even, it comes up, you're still going to lose your commission. So I'd rather make pennies than lose pennies, right? So 3 pips. If you usually take 3 pips out, put it to 3 pips. That's what you were doing. That's what you were scalping with. Win, right?
Also, make sure you get far enough profit before you put it. If you're going to do
Yep.
maybe wait till it's at least 8 pips or whatever.
Yep. You can use it by distance. Yes.
Do you use a take profit with your stop loss?
Yes.
Because that's what I found that really works, because if I have a take profit and then I can move my stop loss.
Yep. So you could have a home run take profit, right?
Yeah.
So you could say, well, usually I've looked at this and probably about the max I'm going to get is 25 pips, right? So you could have your take profit down there, and you could be moving your positive stop loss in increments. And if it hits it, great. Or you can eliminate that take profit and just say, I'm going to let the market dictate when it gets me out of the market. Because the same thing, yeah, that 25 pip win is great, awesome. But that whole fear of missing out is that take profit hits and that next candle just shot down 60 pips. And you're like, why did I close out? Why did I leave my take profit in? And it's not wrong. That's how I trade right now on my live account. I target. My risk is this. I'm going for half of it. I trade about 83%. It works just fine. Right?
I know people who, well, I've heard people and know people who
our live account trade one.
don't like trading stops because
I think my demo one lost though.
But I'd rather be positive, like you said. If I get, I've had disappointments where I've set my trading stop to 150 points or 15 pips.
Yep.
And it'll go down, Maybe it won't go down far enough, but at least I know if I can 5 pips or 3 pips,
Break even.
It's better than. I never looked at the negative like you just said, so that's something to think about. So,
Yep. And trailing stops are another skill that you have to learn. I've just got to that point where I'm just, and again, I probably have a lot better advantage than most people do because I not only have to sit in front of this computer from 6:30 in the morning till 10 o'clock Monday through Thursday because I coach. So I kind of have a little bit of an advantage, right? And so if you can, see, when I first started, right, I took a trade. So when I started doing this, I told Kevin, I was like, if you want me to win pips, I can show you one of the demo accounts I was playing around with. And here's our pip master over here, right? I know how to manipulate this system, right? Before we started this trading, I saw a setup and I knocked out 300 pips in 30 seconds, right? But one, it's not how I ever want any of my students to trade, right? I just saw a signal and I just bet that it was going to go down and I hit sell 30 something times and I watched the market and it went down 10 pips and I just closed them out. If you trade like that in a live account, I feel for you, right? So I could win pips, but I told Kevin I'm going to set this up like I traded. So when I first started, it was a demo account, but I said, I saw this signal. I'm going to go for 10 pips as a stop, and I'm going to target 5 or whatever I did. And that would have been my live account trade, right? And then I start playing around in my demo. Well, the live trade just went, and I'm good with that, right? I'm good. I'm going to wait my next trade. I'm going to wait for my setup. On my live account, I'm so patient, and I wait for the best setup that I've ever seen to get into it because I know that increases my percentage of winning, right? When we're playing in demo, I'll sit there and click buttons all day and have fun, right? Demo was to learn in. But our live account went out, and I'd probably be done trading. But again, now I'm watching the live account, right, that I took the trade in. And so we go account history here, right? And again, what did I do? I think this is about a 1-to-1. Here was my stop loss. Here was my take profit. It won. What's happening right now? Market's going down, right? Again, you sit there and say, oh, I'd be happy with 10 pips all day long. Well, that was a 13.2 pip trade, right? But now as I sit and watch this as a trader, right, I'm saying, why did I just close that out? Why did I just close that trade out?
And sometimes I've done it where I'm like, oh, get back in. And then,
Then it goes the opposite direction, right? So if on this live trade that I took this morning, if I want to put that stop loss, and we could have said, okay, well, let's just take this risk and move it to 3 or 4 pips, and then let's see if this market runs, because I do think I've been waiting for the euro to break down, right? Because of all the, even though that Democrat, the news stuff, the dollar is still strengthening. Yep. So I was kind of waiting for this, right? But this is how I trade in my live account. I wanted to be as realistic this morning what I would do as a trader. Because I always have my students, well, show me how you would trade, right? It was exactly how I would have traded. And I'd have been happy, and I'd come back Monday and look for this same setup, right?
So even though you will let it run.
Not in my live account.
What's that?
Not in my live account.
Oh, you won't?
I haven't got there yet. There's stuff I have to weigh out, right? I'm winning in my live account right now, right? With targeting. I'm very good at it. My account keeps going up, right? Unless I can prove a better system.
On a demo.
Yep, on a demo. So there's going to be so much math that I'm going to have to do to figure out if letting it run benefits me or it doesn't. Because when you see them run in your favor, you're always like, I should let this run, right? But if I'm going to change over this system to letting it run, instead of winning 83% of my trades at that 2-to-1, I'm probably now going to start 5 of those trades. If we just say, so 8 out of 10, I'm winning at that 2-to-1 ratio. Well, if I'm going to start letting these run, 5 of those trades are probably going to start being break-even trades, right? So right there, that's not benefiting me. That's losing money. Because now where I was getting my 15 pips, now I'm only getting 3. That's a loss from what I'm doing right now. I got to see if taking those losses and then hopefully getting those 2 to 3 where I can let it run 30, 40, 50 pips, is it better for me? No idea. That's why I'm trying in a demo. Yes.
I don't have a live account because I haven't finished coaching. But I just wanted to ask you about the scenario. I was watching Euro US on Tuesday night, election night.
Okay.
That just happened to be the currency I was looking at the time. And I don't know what happened, but it dropped 50 or 60 pips just in a heartbeat. And I saw it rise as it started to happen. So I clicked sell, took my mouse down to the X, watched the dollars increment. It got to a point where it paused, and I thought, okay, that's enough, and I clicked out of it. And it pretty much stayed there, and then over the next several hours, it kind of came up. So you would never do that in a live account.
I never chase.
Well, I had no idea what happened. I didn't know.
So I was watching the Euro USD election. I know one spike happened when one of the seats flipped in Florida, and it spiked up. And then after that, it dropped back down, right? So that was one of the things. And then I want to see when Fox News came out and said the Democrats had taken over the House, I think it emotionally spiked again, right?
There was something that happened with the dollar because Aussie US,
Euro US, so anything on the dollar.
Others, I mean, they went out of sight down, I think, and then the Canadian and the Japanese went the opposite way.
One thing
but I don't know what caused that.
One thing I could tell you though, if you're trading your live account, don't in your system that you're doing is working, never try it in your live account.
Yeah, we never fixed any problems in our live account, and we never
demo first.
Never
scientifically tested it.
Yep. Scientifically, mathematically proven it works.
I have a comment about trading announcements. So if you study ahead on what the announcement is going to be, like on Forex Factory, they'll tell you what the expected is. If it goes really opposite the direction of the expected, just wait till that fizzles out and then wait until, I don't know, the shorter time frame stay to get in. Because on those really big moves, some people are just like dumping their previous trades. It makes it go in the wrong direction. But if you know what the right direction is and it's down 50 against it, get in, grab 50 or 30.
And this is one reason why I decided to go short on my live demo account, right? Because we did have an announcement today, and it's actually great news for the dollar, right? And I still believe the dollar is strengthening, and the euro is not doing anything to combat that, right? So I knew there would probably be some emotion, but I started getting some signals. Our majors and minors were overbought, and so I played that. And I just knew eventually this is probably, like he's saying, a lot of times around announcements, right, there's people that actually trade this way. They know that during the announcements there's going to be emotion on it. You want to see why there's wicks up and down? It's because a lot of people put pending orders up and below, right? And with those pending orders, they put take profits, right? And so if it goes up one and it starts hitting buy, the market's going to start going up, right? Well, as quick as those are hitting buys and they have take or stop losses out, the market starts weakening in that direction and the wick starts coming back down. Well, when that wick starts coming back down, if there was initial sell pressure before that little spike happened and it made that buy comes up, the sell pressure is going to weigh back down, right? Now you have just as many people down on that bottom side of that have pending orders, right? So it wicks down after this weight of take profits or taking out. It hits that. Now sell. And so you get this big candle down. Well, now the take profits are taken out, right? And so then you get this wick, right? And that's usually what causes that wick during those announcements, right? And that's why most of the time I tell my students 30 minutes prior, 30 minutes after, don't trade announcements. Also, it's a bad habit to get into when you can say, well, I could do this in demo, right? And the demo is a computer. It automatically puts your trade in and takes it out. Live account does not happen. The best way I can explain this is you have thousands of people watching that market, and thousands of people have put their order in probably before you knew, guy, right? Well, now it's like a DMV. You just took a number. You're 7,850, right? Well, guess what? You're the sucker that when all these guys with the numbers in front of you, their trade's going up, your number just hit for a buy, and it just took them out of the market. And now everybody else before you took out of the market, and you're holding that last number up here, and the market just shoots down, right? Or if you're watching it in your live account, and you're like, oh, it's going up. Buy, buy, buy. Yeah, you're number 10,356, right? And it's going to wait. You're saying, well, I'm buying it right here. And you get in up there. And of course, that's about the time everybody's take profit just hit. And they're happy that you were clicking buy because you got them out of their position, and then the market just drops. It's slippage. It happens in a live account. There's somebody putting your order in, right? So demo, you can play that game all day long. Move over to your live account, you might get some hurt. So I told Kevin this was a horrible idea to let me do this. I said, I'll probably put one trade in, Kevin, and talk for 3.5 hours.
That's fine.
No. My live account trade went out. Look at winner.
Well, see, look at that. It's fine.
I can do the one trade that I did 300 pips on at the first. You want to do that?
Whichever.
I'm up 17 bucks.
Yes.
Yeah. Whoop, whoop.
Winner.
Where's the leader?
It's probably
Clap them
Brett.
for you and freak
Brett's
them.
in there. Brett's in there acting like he wants
Should
to.
we freak them out?
To win the
start
trade.
Clapping for him. Yeah. just
He
just
won't
start.
then.
Brett's in there probably trying to kill it. He sounds pretty serious, right? Brett
Oh, he's
wants
totally focused on the.
Brett wants that trophy, right? Like Brett wants the trade. Like, hey, he can have it. Pip Master, Pip Daddy, love him, right? So here we're starting to look at, this is actually kind of trade stuff that we're talking about, right? So this could be a signal, right? But now let's start kind of taking to the next step. And so my 5 keys to success, I pulled them up a little bit earlier. Let's see if we can pull these up again. She's giving Brett crap. Brett, you're good, buddy. Keep doing what you're doing. I ain't trying to win. Brett's like, is he doing good? Giving Brett a freaking aneurysm over there. Oh, don't listen to her.
So is there a place to go to get this?
I've shared this with tons. Just come over and let me know your email. So these are my 5. As every trader, you're going to have like a foundation of success, right? They're going to be different for whoever, right? But for me and most coaches, after we get there and we kind of sit up there and we do the coaches, I guarantee you that all 3 of us say risk management and money management is probably the number 1 key to success. It is, period, right?
I've learned.
And I'll give you an example. I had a student, understood the indicators very well, back tested, knew that his trade plan worked at a 90% trade success, right? Understood market analysis. And we're going to kind of look at that trade about market analysis. And then he knew how to execute it. He started getting confident. His live account, he is the fastest student to blow a live account. One of mine. Great, right?
How fast do you do it?
12 hours.
Oh, jeez.
12 hours. He blew his live account in 12 hours.
It's not hard to do.
Yeah, but he holds the record. Don't try and beat it, right? And so
How much was it?
I'll tell you. And this is the bad thing. I knew he was doing this because I saw him practicing demo accounts at $2,500 at a very high volume. I already knew he was doing it. And I always tell my students, that's like giving your dog a treat for crapping on the rug, right? And he was winning and he just money signs, dollar signs. He was loving it, right? And I kept our 8 last sessions. Our 8 last sessions was in here. I was up there trying to figure out every way to show him that he didn't do this. And I was telling him, you're going to blow your account. Oh, no, coach, when I get there, promise. I'm only going to trade this lot size. Promise, right? It started out that way. First trade, I think EA gave him $3,000. First trade was pretty good. It was 0.03. So it was about 1%, a little bit high that I want my students to start out with. But at least he was right there, right? He won that trade. Won his next trade. 0.3, yeah. So he's trading $3 on a 3,000, which isn't, that's not crazy, right? Won that next trade. The trade after, all of a sudden his lot size goes up to 0.5. Won that trade. Won that trade. The next trade, won. One volume. Won that trade. Won that trade. The next one, because we have I was going over it with Ashley on I brought up his live account to look at it.
That's fine as long as his overall
Stop loss, right?
goes with it.
Yeah.
You know, if he's at 10,000 and he's trading one lot, that's
Yep.
fine.
The next trade, he wins. The next one, 2 volume. He wins 2 or 3 trades at 2 volume. Like, he hasn't lost yet. Last trade, he sees a setup, 3 volume, goes to bed, does not put a stop loss in.
No.
The market moved 56 pips against him. Not even a big market move. But 56, when you're trading $30 a pip, you just froze your corporate account overnight. We're trying to figure it out. I know it was faster than 12 hours, but it was sometime when he slept, probably about 10 hours and 50-something minutes into it. He woke up and his account was frozen. And I feel sad because he actually is a great trader, right? And so everybody says, and even Kevin, our founder, this is right there. That's his number one advice he'll give to every single new trader. Not learn my indicators, protect every single trade you put in the market. His dad is the one that came up with these indicators. He's been trading these indicators for 14 years. If you want to see something impressive, watch that dude trade off these indicators. What his number one advice is to every new student is protect every single trade. Because we can walk away from a 10 pip loss, right?
Best way that I've learned. I mean, I went through mine account a little bit, but it took me long. But I think the best way to protect your account is smaller lot size.
Yes, I would agree with you. That's one way. And we still want to make money.
You still want to protect it. Even
But-
at a small
yeah.
lot size. I mean, even if it's 0.01, at least at 1,000 pips or whatever, you know, whatever it might be.
So this is kind of what we're going to do. We added signals, indicators. It looks like the market might be coming in this little bounce back. I want to see if the market's going to continue to run here for the next hour. So I'm not going to jump right in because we might have this going up. And if it comes down here, it might bounce off. Market's starting to slow down just a little bit. So here's another trade. We'll put this one in both of the demos here. And I want to do this legitimate, right? And so a lot of people ask, well, what would you do? And how are you going to put in volume and based off that, right? So on this trade, I'm going to put in a sell stop, right? This is kind of a continuation with the market. We think there might just been a little hiccup, and we think it's going to go back down. Pressures are going down. The news announcement today was good for the U.S. And so, again, it came down here and stopped for a reason, so I don't want to just jump in. But what would I do on a 10? Oh, we made money this morning already. 10.017. I'm only willing to risk 1%, right? That gives us $100. I already have a predetermination that I'm going to put a 10 pip stop loss in. If I divide that by 10 and I divide that by 10 on Euro USD, I could trade 1. And I can go back over that math if we want. I just want to get this trade in just in case. I like doing things quick. This is my sell stop. Kind of come back in here. I want it below 13237. 132. You do it right here. Again, even with my pending orders, guys, I'm going to come in here and put a stop loss, right? So stop loss is going to be a sell stop, sell stop. We want the market to hit this order and continue down in that direction. I'm only going to worry about my stop loss right now. Again, I could put it in 10 pips away, but I'm pretty lazy. I just like to get my red line up here, and then I just drag it up about 10 pips. So now, looks like we might be getting into this order here. I want to kind of let this run. And so we'll see if it takes and breaks out the rest of the day. This next hour, let's see if we can let this trade run. But I do want to keep an eye on it and maybe move this to a positive stop loss, and so we don't lose that 10 pips. We'll put that trade in. My other account. Oh, that's one. We could put a sell on this. We can do market order here. Let's do a sell. Again, leveraging, right? This is kind of what happened with my student, but he didn't put a stop loss. So when you start leveraging these accounts, and I always tell my student, when I place this trade, you're going to see this is way over leveraged, right? You have no other idea. When you place this trade and this percentage is lower than 700%, you're probably over leveraging your account, right? So if we put this trade in right here, that's 157. If I put this trade in and at this volume, I'd get out of this trade right now. This is my live account, because I'd be like, holy crap, I'm over leveraged, right? But since this is a PIP competition, we'll see if we can do something great here. Or money competition, I think, is what they changed it into. So we'll see if we'll do something great. Let's go back to our other account and see if we can get to that point where we are managing these trades a little bit better. Again, we kind of talked about this with your trailing stops. Once it's positive, you can put a trailing stop in, right? So we can lock in this trailing stop in, and it will move it down, see if we can get a little bit of a run here. 3.
Trailing stop, it engages when you do it. It doesn't engage from where you bought. It engages from when you did it. Is that correct?
On that instance, because it was positive, it's going to engage where it's at, right? And that was 15 points, so 1.5 micro pips, right? Or pips, 1.5 pips. And so once that trade was down in the positive, and I go to a trailing stop, and if it's over 1.5 pips, it will automatically engage at 1.5 pips where the current market price is at. Okay. But if you're just putting a stop in and at the get-go, like we put a stop in here, sell, and I go stop loss up here, and I put a trailing stop. And let's maybe give it a little bit of room. 3. So this lit up yellow because it's within a really small fraction of this getting ready to hit. I want to say within 10 pips. So if this goes down 3 pips, it's going to take my stop loss and put it break even. Trades run. This is another thing you can do. If you let a trade run and let's say it goes into your favor, instead of manually doing it, you could say, okay, I went down 50 pips. Let me put in a 100-point, 150-point stop loss. And if you did that, that would take that and put it and lock in. If it was 100, it would lock in 40 pips. And then it would just kind of move it down, that 10 pips down. So there's 2 different ways you can do it.
But the trailing stop is going to engage wherever the market is at the time you initiate it.
Yep. And so it will engage if it hits 3 pips above this take profit, or this order, not take profit. So if this hits to 3 pips, this is going to come down and break even, and the trailing stop is activated, right? So we're up on this. This is a 3, 4 pip, 5 pip trade. Nice little scalp. This would be the second one we did today, 4.5. Again, we could do manual too, right? We talked about manual. So if I bring this down to 1.3 pips, I at least have protected this commission, right? So I have locked in $13. It's going to cover the $9.60. If you're going after 5 pips, we close this out, we're up, right? We just won today. Not bad. Only kind of been focusing on actually putting trades in here. $150.
Yeah.
Right? Nothing horrible, right? As this account balance grows, we did 10 pips today. I think a lot of us forget the power of this up here, right? I was only trading $1 a pip. I think a lot of us forget the power, right? When we're trading a $100,000 account and you're trading $100 a pip, and we just knocked out 10 pips, we just did $1,000, and literally those two trades took all of about 2.5, 3 minutes each. Not a bad hourly, right, money. And so we could have definitely been in here more active. I'm definitely more of a coach. I love coaching. And so I'm always going to try and figure out how to help students see a new way to do this. But that was more of, we first talked about my signal, and I want that entry. You can wait for that entry, but there's always more opportunities, right? So this clean pressure, if we're doing the clean pressure trade and without anything else, let's just look at clean pressure, right? And so clean pressure, again, I'm always looking for a signal, right? I've always looked for a signal to get into a trade. So with clean pressure, it was whether red was on top or green was on top, right? And so if red's on top, I should be looking for a sell, right? Green on top, I should be looking for a buy, right? And so as this market starts to roll over, and this one actually happened at the same time, red's on top, price broke below. I usually like both of my indicators to be pointing in the direction I want to sell. So I want my red and green pointing down. So I'd have waited for that signal to get in. And so this would be a trade based off of the signal. I got a great signal. I'm going to put my stop up here. If this is what I was doing in my live account, I'd be going for a 2-to-1. I'd have my 10 pips up here, and I have a 5 pip take profit. We would have gotten out beautifully, right? It would have been a win. So that's the basic of the clean pressure. But that's only one way to trade this, right? I start telling my students, look at the pressure. When you add candles to the pressure, start looking at this pressure as a living, breathing support trend line, right? It's beautiful. It's down, and it's kind of showing you where we might have some resistance and another reentry, right? So now this is starting to come down. And again, you guys say, oh, I'd love to just take those 5 pips. Awesome. But after you close those trades out for a year and a half, natural instinct is, how do I get this, right? How do I get this, right? And we could have done that. We could have even followed this down. Our trade still would have been in, right? So we had our stop here, 2 to 3 candles, and then we start moving this down to a positive and following our pressure line. But look what happened. And this is kind of what we were looking at when I said I want to get back into this trade, is price came up and tried to test the pressure line. And it just held up just like a support resistance line, right? Especially as we were saying, we were in a consolidation. Markets, even though markets consolidate almost 70% of the time, markets, the big guys, do not like markets to consolidate. You know why the reason the market consolidates? Because of us. Do you guys understand that? The majors actually have to dictate our greed and our fear to get it in and move out. The majors would love the market to be running in one direction all day long. You want to know why? They understand and they can see both sides of the market. If they start seeing a sentiment of a sell starting to build up, they love it, right? Because they have positions right here in this sell position, right? How do you think the majors make money? When the market starts to move, start thinking this is a business. If you're stacking your warehouse with a sell at a price at 114, and you have all these 114 prices, right? And the only way you're going to get money is to get the miners to take that 114 sell and think it's a great idea to get in at 113. Once you did that, they just made money. So trust me, if you don't believe the majors want the market to trend, you're dead wrong. That's how they make money. This was a consolidation up here, even a short one. It's only a 5-minute chart. This was a consolidation. Right now, they're probably thinking with the good news, the U.S., that there's a good chance that people will start buying in on this sell. So they're going to try and get rid of all this buying pressure, right? And that's why it consolidates. They get rid of all this buying pressure, try and do fake outs, try and drop the market. Greed and fear, us, is what keeps these markets in consolidation. And finally, when they get rid of all the buying pressure, that's the advantage the majors have over us. They see both sides of the market, right? They see buys and sells going in, and they allow it to happen because you don't make any money when the market just sits still, right? We need the economy, even if it's going up or down, you need the economy to be doing something. And so now they're collecting here, they're collecting sell positions, right? And as this goes down, as we start buying into these sell positions, they're making money hand over fist. The reason why it gets into consolidation is greed and fear, right? People had this line right here as stop or take profits. And those take profits hit and it started pushing back up, right? And then somebody said, oh, now I'm waiting for this pullback. Now I'm going to start getting in. We actually dictate the movement of the market. The majors just can play around with announcements, and they understand the greed and the fear, but they hate consolidations. It's work for them. They have to get rid of one buying pressure and flip it over to a selling pressure, and we're the morons that just kind of keep, oh no, or I was in a horrible position and I get out, right? The greed and fear. But that was kind of based off this. This market's starting to move up, and I said it didn't break through. And now, even though green's on top, everybody understands that this was just a signal, right? Pressure. What are the biggest keys about pressure? Number one, direction, right? A cross is almost like a signal, right? But a direction. And two, inclination, right? So the angle of it. And then last three is kind of the gap, whether it's going together or where it's separating. Fourth, maybe even fifth, what's on top, right? Because we could go back and we could find in some of these long runs that green can be on top for the down way longer than red is, right? And so that's why red crossing over on top is a signal, not an entry. I want some other things to happen before I get in that trade, right?
But even with green on top, like it's still acting as a resistance line. So even though it breaks through the red, even though green's on top,
Yep.
You still want to wait to see if it's going to break the green.
Yep.
Because, and then direction is going to change, right? Your gap's going to close. Your direction and inclination will change.
And that's one thing that we started adding when I started looking at clean pressure. It was just basically green on top and the price to break above, right? And sometimes, this is a great example, is that this is red on top and it broke through, but now I have, the pressure's not agreeing, right? Even with our majors and minors, sometimes we even trade that divergence, right? When the majors are going one way, the minors got faked out. A lot of times if you go back in agreement with the majors, you can win, right? Well, here there's still kind of some confusion on what happens. So when I first started doing this, the first was just as this broke down, I was getting into it. But the more I started testing this, it's actually, and this one worked out great, but usually it's better to wait until both of those lines are starting to agree with it, right? And a lot of times if you get a really good trade sell, is because then it starts to agree with it and it starts to come together and the inclination starts building up that momentum and we start getting good down pressure, right? So again, green pops on top. There might be some buying opportunity. Do I want to jump into a buy as I just saw this? Even this is a 5-minute. This market start moving down? No, right? That'd be a signal. And as Chris was saying, if we get over here and it starts coming up, right, that acted like a support resistance and rejected it. And that's when I was looking in to get back into that sell trade. It's almost doing the same thing right now, right? So hopefully this thing kind of just keeps coming up and breaking down. The sad part is this looks like it's starting to get a little bit wider. So this buy might actually have a little bit more press up. We'll see what happens. But if I was going to get back into a buy trade, I'd want price to break above. I'd want both of these to be going up right before I jump back into a buy, just based off of pressure, right? So we'll see. Again, if I want to start looking for a pending order, this is just scalping. There might be another opportunity for a pending order right here. So let's go. Last hour here, I've decided I want to actually start making some trades. This is the account. Again, if I'm going to do a 10 pip stop, right? Here's that whole thing, one last trade. Should I really take this trade? It's going to be a pending order, so we'll see if it works out. But again, I'm only going to risk, not 10%, 1% of my account. The sad thing is I almost became a math professor. If you're my student and you've seen my math skills, you'd probably be laughing. All right. So still looks like we're at that. We haven't made enough money to kind of increase this. So $100.53 is max I'm willing to risk. If I have that set stop loss where I want to do 10 pips, maybe I want to do 5. Because at 5, I still walk out today with $3 in my bank account. Let's divide that by, I'm going to do a 5 pip stop loss. So now I could do $20 per pip. If I Euro US, divide that by 10. Tell me I could trade this lot size at $2, 2.01. It's going to be a sell stop again. And you could go back and kind of strengthen to see if that held up down here somewhere. I'd have to go into my green charts and see. We can manipulate this and see if this is lagging behind. Put in a pending. Oh, it looks like it's pretty good, right? So we'll go here. Again, I'm always going to protect every single trade. If I want to kind of let this run or use a trailing stop, we can do that. But I'm going to modify this. Again, if it's a sell stop, my stop loss is going to be above. Once again, I'm lazy. I could definitely just put that in the number that I wanted. But, hey, I almost got it right on. 5 pips, good enough. So there's that. If I was going to take profit, I could. You can modify it in there for take profit. But let's see if we get another breakdown through on this. My last trade that we had in on our other account that we're trying to make the money. See what happens when you try and make money? You usually lose money. Still not doing too bad. See if that activates and engages. Anybody knows what happens when that hits 150? 50%?
50?
Goes red, right? It goes red. When it hits 100, they margin call you out, right? So this right now, this account is way over leveraged. I'd never be trading at 116% margin level.
What is your minimum?
For my live account,
What do you watch?
I'm usually about 2,000%. 700 is probably about as low as I'd go, right? But for my live account, about 2,000. But a lot of that too is based off of where I put my stop loss. So I use bigger charts. So scalping, you definitely could kind of manipulate that a little bit more, right? Because your stop's not going to be that far. But on my accounts, usually on my 240s, sometimes my stop loss is 50 pips away. And so a lot of times, just to kind of dictate where I'm at, I have a smaller lot size. So, yep. But here again, we went back to this. And this is one thing that really is getting me into wanting to let these trades run Is right now, if we would have got into this on that signal, and everyone would have been chatting as much as I do, we could be having in locked in using our indicators is where we want to move that positive stop. We could be locked into 18 pips right now. And how comfortable would you be if you started that trade, you waited 3 to 4 candles on the signal, moved your trade to a positive stop loss, and then used pressure as a way to dictate where you're moving your stop? Now we just become managers of a positive trade, right? That's when trading becomes really not very stressful. Because right now, who cares? If this trade goes up and hits that 18 pip stop loss, good day, right? If this breaks down through below this little lower support resistance line, could be a better day, right? But now I'm letting the market dictate if I want to get out. I'm not dictating it. I'm not that scared trader anymore where I got to grab 3 pips and get out, right? Now I'm saying, hey, let it run, right? And you can go away from us. I'm telling you, here, these indicators are unbelievable. But I still believe they've kind of produced some bad habits, right? We're the norm. Going for a 5 risk and a 1 reward and trading at 90% in the Forex market is not the norm how people make money in this. The reason why we're able to do that is because these indicators are that great, right? But the norm of this is most people trade 40 to 50% of this market, and they risk 1 and they let their trade run 5, 6, 7, 8, 9, 10, and that's how they become successful at this, right? So my whole goal is how can I use these great indicators to give us these leading ways to get in the market. The majors and minors, how they pick up on support resistance and can judge if it's going to, or this little pullback or if it's a breakthrough is ridiculous. If you know how to manage this, you'll make a lot of money. Yes.
Did you say the majors and minors pick up on support and resistance?
Oh yeah.
That's programmed into the majors and minors?
I don't know. I don't know what senior put it in.
What do you mean by that statement?
So, majors and minors. If we start getting up here, where these are up here and straight, I promise you right now, and I can already see it, I could put this line here and go back, and this is probably going to see a support resistance line at this price. So right now that's where we're at, and it's starting to pick up right here on this little support resistance line, right?
Just because the majors and minors are starting to
overbought,
that's enough to tell you it's reaching a resistance line.
Getting pretty close. Well, that's why it's maxing out like this, right? It's gone through this channel. It broke through something, right? It broke through, it pushed through. And why is it maxing out? Is because it's whatever it's picking up on, whether it's picking up on people getting out of the market because they were targeting that support and resistance, no clue. I don't know what the logarithms are that's picking it up. Just watching it and going back and seeing how they react, right? It just was off the double cross. Because you might know, and a lot of you guys probably have seen this, is now, and you kind of see it got a little weak, when we get this double cross, right? And this is why I usually do 2 charts, right? I love the half charts. And just like Jason will use your orange crush here and here, I started using my majors and minors on my half charts as this was a predictor, right? So if this crossing and going down and my half chart below it went through the channel, that gives me a good little warm feeling that this has a great chance to go down through the channel, right? But with the majors and minors, why I'm saying it's really good about picking these support resistance lines up. And let me know if you've been in a trade like this, where it comes up and you get a double cross and you get into the trade and then it shoots up and the majors and minors stay up here and they overbought and you lost the trade, right? Or hopefully you had it protected and it's not running against you and you're hedging it and trying to figure out when you're going to price average, and then they did another double cross. It's probably just another little hiccup and you price average down. Now you got 3 trades going again, whatever, right? Slippery slope. But I use this as a little predictor. But why I could say that it's really good about picking up on this is for that reason. It either one will pick up on this support resistance, and depending on what your trend is, if it wants to go up or it wants to go down, your majors and minors are great to picking it up. The only thing you got to determine is if it's going to be a reversal or if it's going to be a continuation. And so how we were talking about using that, just having our stop. And again, most people when we start trading, I was the same way, right? If I could just put my stop so far away, I could win this little bit. And then I can walk around telling everybody, I trade at 96%, right? Awesome. Let me see your account balance, right? Matt Watts trades accounts that are below 50%. And he's winning all the time, right? We're going to have a discussion, a panel with him up there. The last time he did this, and he's probably doing the exact same thing over there, is he probably hasn't had one trade that's successful yet. He probably set and showed everybody a very long-term thing. The last time he did the scalping, he did the same thing. At the end of it, I don't even think he closed out any pips. Did he? Couple? 10, right? The great thing is, a month later, 2 months later, they did another coaches symposium, and he came here with that account that he started. In that 90 days, I think he was trading about 46%, and in 90 days, it closed out 2,300 pips. He probably gave it one of the best explanations about the winning percentage, right? And he said winning percentage is like a bench press, right?
How much you bench?
How much you bench? 95%. Right? Awesome. Hopefully you understand at 95% that your risk to reward ratio is making it well enough that your account keeps going up, right? Who cares? It was the same way in high school. I was a sports guy, right? I was basketball. So we'd have gym class with all these football grunts, right? How much you bench? I don't know. What's your vertical, right? Come in there and try and do what I do on the basketball court, right? I didn't care how much I benched, right? All right, let's go to a leg press. I put all 45s on that leg press, and I'll press that thing. That's why I have a 36, 37-inch vertical, right? Keep bench pressing, right? I don't care about bench pressing. I don't care about win percentages. And guess what? I hope if you trade 90% and you're winning, I'm never going to try and change that for you as a coach because you're seeing something and you're winning. I just want to make sure when I look at your FX Blue account, the week, the month, the next month, that next month, that equity curve is going up. I don't care how you do it. I don't. I don't care if you see something with a dotted blue or the thick blue and you figured it out and you're winning. Awesome. Let me see how I can make it better for you, right? One of the big problems we get in this is everybody, I had this with a discussion with my student the other day. He said, well, you're trading great. Hiram's trading great. Why don't you tell me exactly how you trade? And it might, but for me to trade like Hiram, I better have done what Hiram has done. So when I get to about 1 million years of back testing on the Euro USD, I can probably see these indicators like Hiram is, and he could probably have a conversation with me. But I'm only about 10,000 years of back testing, right? And so Hiram's very smart. He says, I see where Troy is right now. I'm going to show Troy some stuff where he's probably seeing those things. Hiram is seeing way more than I know right now. And the great thing about Hiram is he's not going to show me that until I'm ready, right? So we talked about the 240 clean pressure. 240 clean pressure, I got students that are trading that on these 7 currency pairs right here, right? And they're averaging about 500 something pips a month. Right. Here's the trade plan. I ain't trying to hide stuff from people, right? Here's the trade plan. Maybe I am trying to hide stuff.
Is most of them just taking stop losses also?
Yeah, it's all stops.
Okay.
So it's a 30 pip reward and a 50 pip stop. And it's simple. You want to know how easy this trade plan is? Right? 240 chart. We'll go back and we'll back test some of this in the last 30 minutes. 240 chart. When green is on top, we should start looking for a buy. This is just pressure, nothing else. Green on top, what should we start looking for? Buy, right? Next, that's just a signal. The next is when price, green candle breaks below both green and red, and both green and red are pointing down, we get into, or pointing up, sorry, we get into a buy, right? I'll show you some examples. Vice versa for red. Red on top, red and green pointing down, candle below, get into a sell. Simple, right? He's gone back and he's back tested this for 3 years. He's actually done now the 7 pairs that I have up. Euro USD, 85%. Never worries about technical, never worries about an announcement. He's really playing the casino mindset, right? He's going to just play it out. Here's the thing, though. I could give this trade plan to 100 students. I bet 5 of them are successful. Now, is this trade plan not successful? No, trade plan works just fine, right? Here's the last step. So I brought up these 5 keys to success, right? 1, money management. 2, indicators. 3, getting a plan that you like, back testing it, and making sure you understand how it works. 4, this is where Fred, my student, stopped, right here. He back tested it enough. He saw that if he keeps taking those trades, he's going to keep winning. If he wants to take it to a better, maybe winners percentages, maybe let some stuff start running, get to number 4, technical, right? Today, there was an announcement, market. These are the big 5. And then the last is execution. Well, Fred skipped this, and he did this. But there's a lot of problems people don't understand with the back test. Somebody in here said I could look at the computer all day. I could trade all day long. Awesome. So could I. The question you need to ask yourself, will you trade all day long?
No, every day.
No, every day. Why this plan will probably only 5 people will succeed at this. These are New York times. 5 a.m., 9 a.m., 1. These are the only 3 candles he cares about. These are the only 3 time frames he cares about. And he's looking at 7 currency pairs when he does it. Who in this room is waking up every morning, Monday through frickin' Friday, 3 a.m., and is going to do it all the time? Every day, every week, for the next year. Plan works just fine. Are you going to execute the plan just fine? The greatest thing about this is an entrepreneur mindset, right? Everybody loves the entrepreneur mindset. Everybody wants to be that guy up there in that corner office overlooking the city, right? Everybody wants the end result. Nobody wants to do what it does to get there, right? Everybody wants to be Hiram. Give me $1 million account in 7 months. Nobody wants to spend 80 hours a week for 6 months, 7 months doing what Hiram does. That guy would trade the Euro Open at midnight. He would trade it for 3 hours. He would take a nap. He would be up at 6 o'clock. He would trade the US Open. And then he would figure out what he did wrong. He would back test. He would then spend the next 10 hours back testing, defining his plan. How is it working? Why did I lose? Where could I put my stop loss? All right, now a 3-hour nap. Then I'm going to wake up again and I'm going to trade the Open of the Euro. Then I'm going to take a 30-minute nap, an hour nap, and then I'm going to trade the Open of the US. Monday through Friday. Oh, yeah, and then on the weekends, I'm going to back test 16, 17 hours a day. That's how he got $1 million account in 6 months. He's the 1% of the 1%. Most of us can't do that. I could not have done that. I was working 70 hours a week when I did this, when I started. Right? So what do I have to do? I'm still going to get $1 million account. I just got to do it 3 hours a day instead of 17 hours a day. My 3 hours is going to probably be 5 to 6 years before I hit $1 million. Still $1 million, still the end result, right? And so I always tell my students, and I get it all the time, well, I can look at this every single day at work. I can bring them up. I can look at the indicators all day long. Okay, if you're going to put a plan in that every hour you're looking for a signal, every hour you better be able to take that trade, or you're back testing all that data that you collected is crap. Nothing matters anymore. So why don't we say, hey, I'm going to pick a time where I can actually sit down, focus 1 to 2 hours a day, and look for a signal that happens and then be ultra patient and just take that signal. And now the greatest thing about this company is you have a company, I promise you, they do not care how much money you make them every 90 days. They just care that you protect their equity, that you're doing the right things. We can look at an account and I can tell you if you're doing the right things or the wrong things. You might not want to hear it, but I'll tell you, right? I've seen them, I've been in the room with Ashley and Kevin when they're funding accounts and when they're adding money to the accounts. There was an account that the guy tripled in his focus account. So 6 weeks of trading, he took that account, I think, from $2,500 to 10 grand, handed it in. There was another account where I think at the very end, I mean, you looked at this FX Blue account, it was ridiculous. Just, right? Like, holy crap, give this dude 20 grand, right? He's going to make us money. Another account comes up, and it's just this. I'll show you a couple of my my FX Blues on some of my demo accounts, right? And kind of just this little stuff, right? I think it might even have been a little bit below what they started out at. They funded the $10,000 account minimum funding, right? They gave this other one $3,000, which between $2,000 to $3,000 is about what the max is they do on the initial fund. So this guy that made them almost no money, showed any profit in 6 weeks, got 3 grand. This guy that showed that he tripled account in 6 weeks got $2,000, right? Because then we go in and we see this guy is doing lot sizes at 1.0, and he doesn't have any stop loss, and the trade starts running against him. And then he finds this support resistance, and he goes 8-to-1 on leverage to try and make up that trade. It only takes one time, because he's not putting stop losses in. It only takes one time to that 8-to-1 leverage to hit, or an announcement to happen, just bad luck, and he blows an account. Right? I've had students, myself, guys, I only made 106 pips, $106. Started at 25, $106. It wasn't even 90 days because I wanted to get above before I handed it in. I think it took me about 4.5 months. They add 4 grand to my account for making them $106 in 5 months. I just had a student. She was struggling. She didn't freeze her account, but she was struggling. And so she stopped. And she wanted more coaching. And so just what I was seeing worked with her, right? It doesn't work with everybody. Not everybody's going to see what I see. I understand that. But I taught her some risk management, and I showed her maybe some better entries. She was really good on support and resistance, probably better than I am on the technical side. I'm not a very technical person. I don't waste my time in it. My trade setups are very easy. Majors, minors, or pressure. I'm always looking for the reversal. And so I get into trades early, and hopefully they run. If they don't, I protect my trade and I get out and I go the other direction, right? But my majors and minors, like I'm saying, support and resistance, when it gets up and it curves, it puts the closest support resistance lines. That's the only thing I care about in my trading. I don't go back 10 years and look for support resistance. I'm a pretty simple guy when I trade, right? She was much better at it. She had all these beautiful support resistance lines. Yeah, I've done this for 10 years. I'm like, holy crap. Look at this pressure. When that breaks through and it breaks through, take the trade. And she just saw it. It just clicked with her, right? And she went and she started working it. So she was down $400 She built her account up. She came back. She was still negative $40. So in 90 days, she lost the company money. They still added $2,000 to her account because they saw she asked for help. She figured it out, and her account's starting to go up. So even on a negative investment, they invested more money into her, right? A penny. I've seen a penny. They've made them a penny. They've added money to their account. These guys aren't doing it to make money. The money is just a byproduct. They have a lot of it, I promise you. Kevin has flat out told me, he said, I could be a broker if I want to. I don't know how much money you need to be a broker, but it's probably quite a bit when you start leveraging people's accounts, right? He doesn't want to because it's a headache. But he said, I do this so somebody can get some free time and maybe do something else, can have a vacation, right? Get a retirement, free up some time. Maybe they were like me and they didn't plan for the future, right? So whatever it is, I have somebody doing right now, all he's doing this for is for vacations. He just wants to make enough money in a year that he can take his kids on a vacation. Awesome, right? That's why they do it. So this trade plan right here, it's successful. I've seen it. He sends me his live account every month, and it's working, right? The funny thing is, he's not even trading this anymore. He went down to 0.2. He doesn't care. He says, I'm worried about his pips. They're going to increase my account. When I get max fund to 100 grand, he's going to be trading 5 volume, right? $50 a pip. He's willing to wait that year. At 500, you're knocking out $25,000. Divide that, 20 grand. I always tell my students, if you can't live off of this, right, or this doesn't free up some stress in your life, probably a month, yeah. We probably need to start having a different conversation, right?
On what balance?
That'd be 100,000 when he's max funded.
So I got a question.
Yes.
So when you coach, do you require the student to have the same setup as indicators as you do?
No.
Because a lot of us, I mean, I guarantee none of us have the same setup.
Yep.
You know, we all have our own. And I was just wondering what's your approach to that?
So for me as a coach, like when I go through, I want to do, I kind of want to see what you're trading or what you're seeing, right? Because we're all going to see something different, right? So my biggest thing is kind of show some foundational stuff, right? And they can start taking orders or trades in those foundational stuff. And then naturally they're going to start seeing stuff, right? I hear it all the time. Man, I really like the majors and minors. I can't stand the TNTs, can't stand the pressure, right? Or somebody's like, I don't know how anybody trades the majors and minors, man. I just look for the pressure and I go, right? Awesome. My way is not the right way to trade. My way, how I have the chart set up, is not. I do want to show you that to see if you can start seeing it, right? But I never give my full trading plan to a student because it's just not fair, right? I want to give them the foundation and that base of it, right? And then I want to start growing with them and saying, what are you seeing? Put trades in. Let's review those trades. What if we add this to what you're seeing? What if we take away this? What if we can bring your stop loss in? So you're going to see it way differently than I do. I always give this example. If I'm an English teacher and I tell us, okay, we're going to read this book and we're going to do a book report. The only way two of those coming in exactly the same is if they cheat, right? Now the core is going to be kind of similar, right? But we're going to see it differently. Hiram told me when I started, he said, look, this is what I want you to do. I got these 3 patterns. It was a hiccup, a head fake, and a double cross. That was it. I fell in love with the double cross. And I just went to work. He said, take these trades. At first he said 5 pip take profit, 25 pip stop loss. Take them. Get them in a demo, start taking them. He says if it blows up, it blows up. I'll make you a new one. Keep taking trades. Awesome. He said now you go back and you start looking at that double cross when you're going to trade and you get familiar with it. Does it act this way when it's close? Does it act this way when it's different? Does it act better if it's into the channel? You know, I added a new chart. I trade the majors and minors 100% differently than Hiram does. I go into Hiram's office all the time. Hiram, have you ever looked at this? Have you ever used a half chart on your majors and minors and used this as a predictor? If this half chart went through, there's a great chance that this can go through. Never thought of that, Troy. Kevin, the same way. I was showing him clean pressure, right? I was like, because I asked the same thing, right? I said, Fibonacci with clean pressure, it works out really great, right? That math of Fibonacci, if you can pick the right lines with pressure, it works ridiculous. So I asked Kevin, I said, did your dad put Fibonacci calculations in pressure? He said, I don't know. So I have no idea what his logarithms were, right? And I said, or do you think it's just because those levels are hitting and the market's doing something and the pressure's reacting? He said, that's probably more realistic. And so just like majors and minors, I've seen that it hits support resistance, right? That's what that's showing. And so now it's just how do we react to it? And the best way is to get a plan, right? Because I have students all the time say, no, this is what happens. But our mind always wants to remember the good and not the negative, right? I've honestly seen this with one of my students where he's told me flat out the indicators don't work. I'm like, challenge, game on, right? And he says, the only way I'm going to make money is if I see the market drop and I do a retracement trade. That's it. That's how I make money. Myself, just like Kevin, we're not morons, right? Kevin goes to trade expos, all these people trying to sell indicators. Kevin goes to them all the time. He said, Troy, I know it's hard for you to believe, but if there was a better indicator out there, I'd be trading it. I'm not an idiot. I'm here to make money. He said, I've just never found it. You can believe me or you can go look. But I'm telling you, our indicators are leading indicators. He says, I do it. I go down to these trade expos. I hide the candles. People walk into my booth and say I'm crazy. You can't trade just off of indicators. He says, well, I know I can because I go look at their indicators, and my indicators are 3 or 4 candles faster than theirs, and those idiots are buying me out of my position all the time. And so we have the best, but we have to see it differently, right? And so come up with a plan that you see, back test it, and then trade it. That's how simple this is. We want to complicate it, right? And I've done this. I wanted to go see what so-and-so was doing because I hit a loss, right? And our mind, it's so easy to say, I know what the indicators do. Prove to me what the indicators do. With my other student, I proved to him. I said, here, look, clean pressure. When you started coaching, 15 minutes in the morning from when you were trading, if you followed this simple plan using our indicator, one indicator, you'd be up 90 pips right now instead of down 460. I proved it to him. He still says the indicators don't work. I said, all right, I'm also not a moron, right? You say your plan works. I'm already going to tell you it doesn't work because I've already seen that and I've already chased that foxhole down, that little fox down the rabbit hole, whatever you want to say, right? I said, I know it doesn't work. It could work, but how you're doing it fell. I said, let's just go back here really quick. Go back. I find a time when the market starts to drop, and that's where he looks. All right, green candle, would you get in here? Yep. Wrong. You just lost. Green candle, will you get in here? Yep. Wrong. You just lost. 5 times in a row. 0 for 5. He lost. He still believes his way is the best way to trade, right? Because one day he got lucky. One day he got lucky. He saw a retracement. He understood that the correlation pairs of markets, and he stacked high on a buy on all these buys and sells. He did the opposite of correlations, was way over leveraged, ended up making like $800, $600, $700, $800 in like minutes, right? And that little thing, even though he lost it in 2 days, he lost all of it and even more. That little win, he thinks that's the only way you can trade the market, right? So Rob just came in. He's like, we were working with Rob. He just came in, and he says, I see this. I said, well, you probably see it because you took a win, and you're thinking that always is going to happen. Awesome. I love that you're seeing something in the indicators. Now prove to me that it's working. That's where the scientific, that's where the back testing comes in. Because we see something, and then when it wins, and we'll go through and it's a loss when we're back testing. We don't ever worry about that loss, right? Oh, it won. Oh, it won. Oh, it won. Oh, it lost. It lost. It lost. It lost. For some reason, the mind doesn't pick up on those losses, only the wins. And then we think we know how to trade, and we haven't tested to know how we trade. And so Hiram will always say, prove to me mathematically and scientifically it works. And that's how we do it with back testing. Let's go over, so just with clean pressure. This is my clean pressure. I brought up some FX Blue accounts.
And so what do you mean by clean pressure?
We'll go over that.
We have about 10 minutes left, Troy.
All right. I think everybody's safe. I don't think I won. You can go tell Brett that he got the trophy probably.
Should I start clapping for you again?
Don't start clapping.
Why not? No, you're teaching. I like that. I think it's very beneficial. So, Troy is not all about the money. He's all about the teaching, right, Chris?
Heck yeah, yes.
So our sell stop didn't work, and we could keep moving this up a little bit. Looks like you won, buddy. So we can move this up if we wanted, or I could just say I'm done. I tried to go for my last one. We ended up knocking out $53. Not bad. Like I said, if I wanted to win this competition when it was a PIP competition, it's not hard to manipulate this stuff, especially demo account. I think I closed out before this trading competition. I think I ended up closing out. What account is this? So I just playing around. I decided if I wanted to give Brett a run for his money. And so this morning, so the last 3 or 4 days, I'm up like 600 something pips. But this morning, I was going to decide if I wanted to give Brett a run for his money or if I just wanted to trade this the right way and teach you guys something. If one of my students was trading like this, I wish I could reach through and shatter his computer screen at the moment he did it, right? This is fun and games. I don't trade like this. Like I said, that one count that I started out with, that was my live account, right? I took a trade this morning at 1 for 13 pips. I'm good. I'm just going to keep doing that every single day. Some days I'm going to lose. Some days I'm going to win. But I know my percentages are going to work out in my favor. But this morning before the trade competition, I decided to say, let's see what I could do. This time here, we look when this opened and closed, I believe in just minutes, right? Seconds. And so pips, we were just doing a pip competition. What did it end up doing? 48. I closed them out in 52. 4 minutes. So 4 minutes. I did 1, 2, 3, 4, 5, 6, 7, 8, 9, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. 200, probably a little bit less than 200, about 220 pips in 4 minutes.
So you took 24 positions.
At a small lot size.
You hit the sell button 24 times.
So I saw a signal on our indicators. And, it's still a gamble, but I saw a sell opportunity on our indicators, right? And I broke through a little bit this morning, sell. And so all I did was come down and drop my lot size down to 0.01 on a small account. And then I just looked and was watching the percentage, right? And I just sell. Kept hitting sell until it got down to 300%, and then I stopped. And I moved up the screen, right, the order screen, right? And I'm just watching. And that market just dropped, continuously dropping. It got to 10 pips, and I just started closing them out. Close, right? Guys, that's stupid, right? It's just a dog and pony trick. I'd never do this in a live account. First of all, if I wanted to trade this for 10 pips, why wouldn't I just trade a volume to match this, right?
Yeah.
So now I'm coming in here and I'm having to managing all these accounts when I could have made the same money by just moving up this volume, this lot size to match it, right? Oh, the price turnkey. Oh, yeah, and another thing too, guys, the demo on turnkey, they do not use the same data feed, right, that we use. So now start thinking about this on a business side, right? So the business side of it. You better believe that Green Charts, who produce our indicators, right? Green Charts is a charting system. They were the ones that were able to take seniors' logarithms and put them into the lines that we see today, right? Now, they have nothing to do with the market as far as making money off of you being successful for your buyer trade. Not really. What they have to do is make sure that their charting system is matching with some of the greatest data feeds in there. Why you guys pay 46, not why you guys, why I even pay $46, is that's what they're buying their data feed stream. And they're getting the best data feed, so their indicators are matching up with live whatever broker. There's thousands of brokers, right? Each one of those brokers are using different data streams. The best way I can talk about brokers, because there's a lot of students that are getting upset. Why is this a lag? Why is this that? Someone just brought it up on here, right? The best way I can say, I'm a sports guy. I coach basketball. My son's playing college basketball right now. The broker is kind of like the ref, right? It's part of the game, but sometimes they can be crappy. Sometimes they can be off their game. And I can't control the refs, right? I can only control mine. The broker, turnkey, they're trying to get it fixed, but their demo account feed is not as good as their live account is almost right on. It's just like Capital City, maybe pip micro points away, right? Turnkey's demo, they don't use the same data feed. We're trying to get it fixed. So you can either go to Capital City and open up a demo account and trade a focus account on that and get really good at understanding, or you can manipulate it and hand in this unbelievable account. Yesterday, 30 seconds, I closed out 200 something pips, right? All I'm doing is manipulating the system. Am I getting better? No, right? And so I've told some students that have issues with it, I said, just go and open up on Capital City. Capital City almost matches our green charts perfectly, right? Right now, they're trying to get the demo feed fixed on this so it will match. But you can manipulate this, and you can run around. I bench 97%, right?
And it will kill you in your live account.
Or it will kill you, right?
If you do that.
And I just tell students.
Which makes that terrible because
they're trying to get it
teaches
fixed.
you bad stuff.
Yep. And I just tell my students, I said, look, I have 100% belief in this data feed, right? Because I know Sierra charts, green charts, that's how they make their money. They want to make sure this is about as accurate it is to live market, right? And in my live account, it's almost spot on. Again, it's going to be a little bit, right? A little bit different, but it's pretty close. So I tell my students, make sure you're doing the right things, right? Don't go in there and try and inflate this demo account, right? And win just to beat your chest and say, I haven't lost in like 3 days, right?
So has it always been off or has it gotten worse?
It seems like when more people get on it, it lags worse, right? During high points of volume and time, it seems like it starts to lag. It seems like when it slows down and not many people are on there, it's almost right on. But we have talked to them, right? And people are even chatting in, and I know they're looking at it to get it fixed. But there's nothing. I mean, I'm trading at a 10 cents, right? So 4 pips, right? I don't even think. I think I lost one because I didn't close it out and I wanted to let it run, right? That one right there, I wanted to let it run. These are 12 pip trades, right? So out of all these trades today, 10 pips, right? Not making much money, but killing it on the pip side, right? But it's not about that, guys, right? Don't try and find and manipulate something, even in your own trading. So many just don't want to put the blinders on and just figure out what they can see in the indicators and trade it. Everybody wants to go see, well, what does Hiram do to be successful? What does Matt do? What does Troy do, right? What is this? They run around trying to find this perfect unicorn system, and when they could have just focused like some moron like me, I'm not very smart, I focused on one thing, a double cross major and minor. And I went back and I back tested that thing and figured out how it worked. You ask, why do I think when it goes up there is it hitting support and resistance on a Euro USD, on any of them? Because I've watched it thousands of times, right? How do I know I want to put my stop loss there? I've seen it thousands of times, right? I didn't go checking and chasing these foxholes. Right there, I'm about 7,000 pips. Did I win? I only won. I owe 50 something bucks is what I closed out.
What's the actual total?
50, 53. Oh, go into my other demo account.
There you go. Give me your best one.
53 bucks.
53.
Log in. Right.
53.43.
Ooh.
53.43.
Sorry.
All right, yeah.
It's not a few zeros.
53 bucks. We won. We survived to do it in the next day, right? And early on my live account, I only did what, 13 pips?
So are you buying lunch then?
Oh yeah, always. Hey, get lunch.
Huh?
Get some lunch in here. No.
For you, yeah.
That's rude. And so guys, just, when you look at new coaching strategies, take them, right? My coach showed me clean pressure, right? I didn't just jump in and start trading that in my live account. I still do the old rusty, trusty double cross, 240, 120, right? I'm trying to implement clean pressure in, and I'm trying to figure out how I can use it. But I'm not. When Matt Watts, when I was a new trader back in the day and I saw Matt Watts, he was talking about letting these trades run. It sounded like it was the greatest thing. I tried it and I couldn't figure it out. It's a skill, right? I'm still working on that skill to see if that's going to be the best thing for me. If I can take that risk, put it at that and let it run, if that's going to work out better than me for targeting, right? I'm very good at targeting. My risk is this. I take profits that 83%, right? Here's another demo account. Let's look at this one. I've been trading this demo account. 93 cents. Did we win? Oh, I'd laugh. If we took 2 trades and we won this, I would crack up. All right. This one's 74%. But here again, about a 1 to 2 ratio. My risk, 2. My wins, 1. This is my clean pressure account. This is what I started when I found out clean pressure. Been trading it for 94 days. Started out at $2,000. Do you guys understand if I handed this in for funding, that they'd probably give me $4,000 to $5,000?
Why?
Because you use consistency.
Because this nice little equity, even though there's some hiccups, right, it's still been going up, right?
You probably been trading it like 0.05, 0.1.
Yep. We go back, we go into orders. There's a couple in here, and this happens, right? Especially when you have a lot of demo accounts. You're into one and you switch over to the other one and you forget to check your volume. Anybody do that before? Right? Done it.
I did on my live account. I put in a lot size of 5.
Yeah.
Realized I did it after.
So most of these, it's funny, when I decided to maybe go up a little bit and trade it, that's when the market decided to teach a lesson. I might not be ready for that big one on this one yet. But most of them really low, $1 a pip, nothing crazy, right? But this, they love, it's not just the balance. Everybody wants to see you making money. Equity, right? Can you protect their money and grow it? Not exponentially grow it, not triple it in 5 days, just grow it, right? I'm up.
How many pips did you have again?
Dollars.
I know, but how many pips did you have?
Pips?
Yeah.
Throw it on FX Blue quick, it'll tell you.
It's dollars.
I know, but I just want to know how many pips.
I was trading, I think it was like,
Made 3 on one.
yeah,
10.
yeah, 13, 14, nothing big.
Pips?
Yeah, I think I was trading 2 volume.
14 pips?
So, yeah.
Okay.
Who won?
I'll tell you. You'll know in like,
She's not telling me.
yeah, ish.
So, and again, here's one thing that I look at as a coach, right? Like we were saying at the start, I don't care what you trade, 90%, 50%, 30%. I give two craps. For me as a coach, when I start looking at these FBAC blue, show me what you win, show me your average win and your average loss. And I can simply just tell you if you can keep trading this and doing what you're doing, if you're going to be successful. So we're at 30, it's 30%. Real easy way right here, the risk of the ruin, 0%. The reason why this 0% is because this math equation works out, right? So 73.4, if I times that by 10.2, it's going to give me this great number. Awesome. I'm also going to lose, what, 26.4, right? 26.4 or 26.6? 4, right? Wouldn't that be? I was really good. I know I joked about it, but I did want to be, huh? 26.6. I joke about it, but my first degree that I went back to get was a college math professor.
There you go. That's it.
Times that by 20.47. Which one's greater? My wins or my losses? As long as I keep doing exactly what I'm doing, when this account gets max funded, I'm going to be a very happy individual.
Try what did you do before you became a trader?
What didn't I do? Before I was working up at Praxair. Before that, I did network marketing, drove truck, been in the military, coached basketball.
Praxair doing sales and deliveries and so
Actually I started out just doing gases, filling up the cylinders. So not bad.
So there's two of us in this room that have come from
No experience.
In the welding industry.
Yep.
And we're now both traders, and at least I have no ties back into my welding career at this point.
Me neither. I drove my last job before I started coaching full time was driving truck over the road. Making great money. Probably knocking out about $13,000 a month. That crap is for the birds. Right? I was with one of my buddies. He convinced me. He's like, just come out. I just bought a truck. And he said, I'll split it with you, half. It was great. We were making a lot of money, but I couldn't get off that truck fast enough. Right? So.
How long did it take you from the time you got started in trading and until the time you were comfortable just being a full-time trader?
So when I started this, I actually had a different, like I said, my wife makes really good money. Even in my network marketing company, I have checks still coming in from that. So we had the money side done, right? I did this just because me and my wife, probably for over the last 10 years, we've been making over 6 figures. And so my biggest thing is I just spent it as fast as I could make it. I never started a 401k, never done any investment. And I was at the point 38 when I saw this that I probably need to start figuring something out, or I'm going to get 65 when I can't work, right, and not be able to keep making that money. And so that's why I did this. I didn't do it to make money initially, to free up what I was doing. I just wanted to get that $1 million account for the retirement. But I did start out the pro funding. After the 2 money added, that's when you can usually start making money. After that, I was able to pay for my upgrade. And that's the only money I've taken out of my account so far, was to pay for my upgrade.
Who was your coach? Was it Hiram?
No, Hiram's my COD. Trent was my coach, and then he was my executive coach too. But at that time when I upgraded about 6 months ago. I've been coaching for over 7 months now. I was already coaching when I upgraded. And so then it was more about just bouncing ideas off of each other. And that's when he showed me clean pressure. So, but usually it's about after the 2 initial fundings. if you're doing the right thing, that's usually when you can really start seeing this, 6 to 9 months is really probably what you should start expecting to start making some money. A year, I always tell my students, think of it as a business. Even McDonald's is just probably one of the greatest franchises out there. Whether you want to eat their burgers, their junk they're feeding people, right? They still is probably one of the best franchises that can quickly turn your investment into a profit. And it's still not right away, right? That's one thing I always tell my students. Everybody wants that. I want to be making $10,000 next month. Well, if there was something out there where you could be making $10,000 next month legitimately and only invest 20 grand, everybody in the world will give their arm for that investment, right? Nobody in here, give me 20 grand right now and you'll start making 10,000 next month. Everybody's like, let me go get my 401k, right? That's not realistic, even in a business. This is a business, guys. Expect at least a year of learning. Some people are quicker. Some people have been doing this and see the indicators and they just take off. I had no experience in this, right? I'm still learning. I tell my students all the time, I'm not at a max funded account yet. The reason why I'm not at a max funded account, it's not because I don't have a great trading plan. It's not because the indicators don't work. It's because I still have issues, right? Personal issues that I have to figure out before I get to a max funded account. Ego and patience. I think I finally conquered the patience, right? The ego is my next big step. And my live account right now is drawn down, and it sucks. Why did that happen? Because I was about ready to get my next funding. And guess what? I didn't want to lose. So guess what happened? I didn't protect the trade. And then it was 100 pips against me. And then what do? Oh, I can't close at 100. Then I'm going to have to do all this work to get back up, right? So then I hedged it. Yeah, then I hedged it, right? I'm going to hedge it. And then I got to a position. All right, now I'm gonna double up. I'm gonna price average out. But what if this goes here? Right. Well, then I'm gonna put this way down here, right? I'm gonna put a double protection, right? And me on the truck being tired when I was doing this on the truck, right? After I just drove 16 hours. I was like, all right, well, a great position. I think this is gonna go up, which I was right. But I'm gonna hedge this. And usually when I put a hedge when I go to sleep overnight, I always take out my take profits. Well, guess what I forgot to do? Take out my take profit. So guess what happened? That market went and hit it by like a pip and put that hedge that now is 4 times the size of my initial trade that I should have cut at 10 pips, right? And guess what? The market did exactly what I thought it was going to do. Went down, hit both of my take profits, and continued down, right? With that hedge open 4 times what I'm normally wanting to trade, right? Finally, I hedged it and I came into higher. I'm like, what the crap, right? And I tried to work out of this with all this. I finally said, forget it, equity reset, and I'm just going to take the bullet. And now the thing that sucks is if you have 25 grand, right? We have a watermark at 50%, right? So now if you have 25 grand, 1250 is that point in time where if you hit it, you got to pay for more coaching, put more money in. Great, right? Who cares, right? I'll do it. I don't care. I have money saved up to do it if I want to. But ego, right? I don't ever want to blow an account, right? So now I've lost, I think I'm down like 35%, right? So now, anybody want to know how long it's going to take me to dig out of this hole that I made?
Just,
Because remember, now I can't trade at that volume, right? Because now it's not based off what's in my account anymore. It's based off that 50%. So I draw down 30%, and now I only have maybe 5 grand in here to work. No more trading in those high volumes anymore, right? I got to drop that down because now here's my risk management is only 5 grand instead of what's in my account. And so now I'm dropping down and I'm trading and I'm winning. I think I've won, but it is such a slow, minute crawl out of this dug up hole. And guess what? It's great though, because that learning, again, stop it. Put in your stop loss. Also, when you're wrong, I should have just closed out of that freaking trade. I was wrong. I could have got out 100 pips of that volume way easier than the 700 and something pip value that I messed myself into. right? So now I'm just digging it out. So it happens. We have to conquer ourselves with that trade plan. Like I said, it works. Do you work it though, right? Are you going to do it? It was funny. Even Fred, he started putting that trade plan into effect, and he's like, he's retired, so he's just doing this one for something to do, and then just add more money, right? He has a pension in, and so he has a beach house. He went golfing and fishing for a trip, right? Oh, sad life, right? And he didn't trade his plan for those first 10 days. But when he goes back and he's getting his average for his month off of that plan, then he started trading it. Well, the market got into consolidation, and that clean pressure depends on how big of the consolidation if it works. But consolidation will eat up almost any trading plan that I have because I'm always looking for reversals, right? So clean pressure, it ate it up. So the next 20 days he traded, he was losing. And I said, Fred, if you go back and you back test from day 1 to day 30, would you have won this month? He said, yeah, those first 10 days killed it. I said, are you starting to see it, right? You back tested this plan. Now this is the work part. You've set up for a year that you better be available Monday, Tuesday, Wednesday, Thursday, Friday, and be able to look at the candle at 5 a.m., which is our 3 a.m., 9, and 11. And you better take them if they're there. If you don't take them, all that 3 years of back testing every single currency pair that you tested does not work. And he said, well, but sometimes it could work in my favor. I said, all right, it could, right? But what you just did, because I think out of the 36 months, 38 months, or 44 months, there's only 4 losing months with his plan. 4. And I said, but what you just did now is you took one of those winning months, and because you only traded 20 days instead of 30 days, you took a winning month and made it a losing month. It's going to skew your thing. I said, best would have just not traded this month. Could have been a win or a loss, you don't care, and then started trading the next month. So he's starting to see it. And that's one thing I think most students get a problem with is they want to trade all day. Well, it's a great want until now it becomes work. Doing the work and putting it in, that's the work, right? And if you just said, I'm going to back test this double cross every 60 minutes for 14 hours and it worked, well, now good luck. Every 14 hours for the next year, you better take that trade or your plan's not going to work. The math is not going to be in your favor anymore, right? So I think it's lunchtime. We're going to come back. I know there's still some questions. If you have questions, I know clean pressure and stuff, I'm going to stop talking because I'm a coach and I could probably sit here and talk all the time, right?
Award ceremony in 15 minutes.
I'm at least going to get third.
Send me that.
Perfect.
You said you started this when you're 38.
Yeah.
Because you don't look 38 now.
I'm 40 now. It's been 2 years.
What the heck?
So, yeah. I try and stay young. The thing is, my mental capacity is that of like a 7-year-old. So I think that helps me out. So I act.
I do your Saturday morning calls. Those have been pretty helpful. It's just that I'm